Is authorized to declare a recess of the committee at any time. This hearing is entitled the Semi-Annual Report of the Bureau of Consumer Financial Protection. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. I now recognize myself for 4 minutes to give an opening statement. Thank you, Director Chopra, for being here today. As the director, you wear a lot of hats. You are a member of the Federal Deposit Insurance Corporation and the Financial Stability Oversight Council. This committee has spent a lot of time understanding how regulators reacted to the failures of Silicon Valley Bank and Signature Bank. Given that both the FDIC and FSOC played critical roles in those failures, I'm looking forward to hearing about your involvement in the decision-making process. As we said when FDIC Chair Gruenberg and Vice Chair Barr testified before this committee, there was and continues to be a lack of transparency surrounding the regulator's decision-making that first weekend in March. Was there an ideological lens that impacted your response? Did your views regarding bank consolidation lead to a delayed resolution and greater uncertainty in the financial sector? Let's spend more time on this when we get to questions. Turning to your job today as CFPB Director, your agency is responsible for regulating and enforcing consumer financial laws. Clear rules and expectations of how to comply with those rules benefit all participants in the consumer financial marketplace. Unfortunately, under your leadership, the CFPB is doing the exact opposite. First, your agency identifies consumer harm in one instance for a specific product. From there, you extrapolate that harm occurred everywhere and everyone should be under suspicion. In fact, every act is presumed abusive until the CFPB or a court decides maybe they aren't. You use compliance bulletin circulars and advisory opinions to sow doubt and confusion in the marketplace. You vilify entire industries simply because they are politically unsavory in your opinion. The practice of name and shame first, verify later isn't consumer protection, it's McCarthyism. This harms consumers and the economy at large while propping up trial lawyers and consumer activist groups. Let me be clear, that is not the mission of the CFPB. Finally, I'll turn to what appears to be your most recent appointment as an appendage of President Biden's re-election campaign. When the president started talking about junk fees, the current hyper-partisan CFPB engaged in a campaign about its effort to clamp down on, you guessed it, junk fees. Look, it's an easy target. No one likes fees. And to be clear, some fees should be questioned to ensure people are not getting ripped off. But to indiscriminately label fees as abusive is a blatant attempt to pander to Americans who have been hung out to dry in the Biden economy. My Democratic colleagues will likely turn to their favorite talking point, corporate greed, to explain away the need for fees. But you know who else relies on fees? The government. The IRS charges late fees on taxpayers. If you want to enter most national parks, you pay a fee. Even the CFPB charges fees on Freedom of Information Act requests. So why would the CFPB believe that the same costs that these fees cover, or the actions they are designed to deter, do not exist in the private sector? I'll finish with this. The current CFPB operates in an opaque, increasingly partisan, and analytically weak manner. We experienced this under Richard Cordray, and his legacy lives on with you, Director Chopra. The CFPB is directly overstepping its bounds and serving as judge, jury, and executioner in the consumer financial marketplace. That's why committee Republicans advanced a package of bills to reform the structure and funding stream of the CFPB to ensure transparency and accountability to the American people. And let me just say one thing about the rulemaking on credit cards. I want you to talk about this, Director, because we don't understand how it's protecting consumers to say to a subprime credit card borrower who's always on time and never pays late, which is 74%, according to your own data, 74% of Americans who have credit cards never pay late. Why is it consumer protection to force them to pay a higher interest rate by lowering the late fees on borrowers who never pay late? And with that, I yield back my time, and we will now recognize the ranking member of the full committee, the gentlewoman from California, for 4 minutes for an opening statement.
Thank you very much. Good morning and welcome, Director Chopra. I am so pleased that you're here this morning to share with us the success and all of the good that your group has been doing. As we predicted, instead of focusing on how we can strengthen consumer protections and avoid a catastrophic default or create jobs, Republicans are focused on undermining the CFPB, the only federal agency with a singular mission of protecting consumers. As we speak, extreme mega Republicans are teaming up with predatory payday lenders to challenge the constitutionality of the CFPB's funding in the Supreme Court based on a fringe legal theory. Every single other court that has affirmed the validity of CFPB's funding, but not just like MAGA Republicans, who continue to deny election results. They are continuing to deny these facts also. So let me state the facts simply. The Constitution is clear. Congress can fund the executive branch, including the CFPB, banking regulators, and other agencies however it likes, and has done so for nearly 250 years. This attack on the CFPB is yet another destructive effort by Republicans to undermine all types of government programs, including and especially Social Security, Medicare, and a lot else. Let's take a look at last month. I was proud to lead an amicus brief with 144 current and former members of Congress supporting the CFPB against this reckless challenge. Republicans are also advancing legislation to undermine the operations of the CFPB. These efforts are a direct attack on consumers and the safeguards that protect them in our nation's ever-evolving financial system. Despite these attacks, the CFPB's record under Director Chopra speaks for itself. CFPB has successfully combated junk fees, relieved the burden of medical debt on consumers, credit reports, fought back against housing discrimination and redlining, and held large financial institutions like Wells Fargo accountable for repeatedly breaking the law and harming people across America. In fact, the CFPB has returned more than $17 billion to 200 million harmed customers. That's why 80% of people, including 75% of Republicans, support the CFPB and want the agency to continue its job. Republicans should start listening to their constituents who can tell them what a junk fee is and explain why they need to support this critical agency's work. Additionally, the CFPB's new small business lending rule, implementing Section 1071 of Dodd-Frank, will go a long way to finally root out discrimination in small business lending. It will open up new funding opportunities to help small businesses start up, grow, and thrive. It will do this in part by tracking data on minority and women-owned businesses, as well as LGBTQ plus owned businesses, which are especially focused on during Pride Month. We're focused on that now. Democrats will reject Republican efforts to use the Congressional Review Act to eliminate this long overdue rule, while Republicans refuse to stand up for consumers, including LGBTQ plus small business owners. They continue to protect the interests of large corporations. I yield back.
Gentlelady's time has expired. The chair now recognizes Mr. Loudermilk, Vice Chair of the Subcommittee on Financial Institutions and Monetary Policy, for 1 minute.
Thank you, Mr. Chairman, and thank you, Director Chopra, for once again coming to speak with us this morning. Unfortunately, since the last time you were here, it doesn't seem like much has changed. The CFPB is still an unaccountable agency with centralized leadership and a constitutionally questionable funding structure. The Supreme Court is currently looking into the latter, and I'm hopeful that their decision will show us a path forward for the agency under regular appropriations. Industry feedback has been near unanimous that the Bureau is acting with little to no regard for the downstream effects of their rulemaking on consumers or small business. Through its wide-reaching disclosure rules, industry circulars, and opinions issued across various media, including enforcement, the CFPB has collected a wealth of consumer data, and in March of this year, we were informed of a significant breach at the Bureau that compromised data belonging to hundreds of thousands of consumers. This raises important questions over whether Congress and the American people can trust the Bureau to look out for their own best interests if they're not even willing to protect the information they collect. The Consumer Financial Protection Bureau is deeply flawed, deeply troubled, and in desperate need of reform. The best time to hold the Bureau accountable is not today, it was 12 years ago, but the second best time is now.
The gentleman's time has expired. The chair now recognizes the ranking member of the Subcommittee on Financial Institutions and Monetary Policy, Mr. Foster, for 1 minute.
Thank you, Mr. Chair, and Director Chopra for being here today. In an era where consumer financial transactions have become increasingly complex and oftentimes daunting, the CFPB serves as a beacon of protection, ensuring that individuals are treated fairly in the marketplace, a real example of government doing things to make people's lives better. As our technology and ability to transact gets faster and more efficient, so do the scams and elaborate fraud schemes that wish to take advantage of our constituents. The CFPB protects the most sensitive parts of our population, your focus on the protection of older adults, on vulnerable groups from service members to LGBTQ+ individuals, and their partnership with advocacy organizations and their actions against companies violating laws protecting service members and others demonstrates their dedication to safeguarding those who may be more susceptible to financial exploitation. And it does so, all of this while coming under constant attack. With the coming onslaught of deepfake AI impersonation and the opaque ChatGPT robo-advisors, your job will not get easier. So thank you, and I yield back.
Gentleman's time has expired. Today, we welcome the testimony of the Honorable Rohit Chopra, Director of the Consumer Financial Protection Bureau. Director Chopra, we thank you for your time, and we will recognize you for 5 minutes to give an oral presentation of your testimony. Without objection, your written statement will be made part of the record. You're now recognized for 5 minutes.
Chairman Barr, Ranking Member Waters, and members of the committee, thank you for holding this hearing today. I'm pleased to report the CFPB continues to deliver tangible results for the public, ensuring that consumers are protected, ensuring that honest businesses are safeguarded, and preparing for the future as big tech and artificial intelligence reshape the industry. I want to share a few observations about the state of household balance sheets in the United States, as well as some highlights of our work. American families continue to benefit from a resilient labor market. Consumer spending is quite robust and borrowing has accelerated. Inflation in key categories such as vehicles and others have contributed to rising levels of household debt. Americans now own $17 trillion in mortgages, auto loans, student loans, credit cards, and other consumer loans. Rates are higher than they were a few years ago, and some families are paying much more. Overall, current indicators of distress on consumer credit remain fairly muted, though there are modest signs of increased delinquency. We'll continue to monitor the impact of changes in interest rates and home prices closely, as well as other changes that might impact large segments of the population. We are on high alert for shocks to the system that might unsettle household financial stability. The failures of Silicon Valley Bank, Signature Bank, and First Republic highlighted significant vulnerabilities in the banking system, and regulators took a series of extraordinary actions that limited the fallout to the broader economy. But it is clear policymakers need to take steps to avoid the need for emergency measures in the future. With respect to congressional directives, CFPB has made major progress to propose, finalize, or implement required rules on credit reporting for survivors of human trafficking, small business lending data, PACE lending, the LIBOR transition, and more. We're reviewing old rules to find opportunities to simplify and future-proof them. We built on the work of my predecessor to publish more advisory opinions and guidance that help small and nascent firms looking to develop new products and services. We're focusing more heavily on supervision of non-bank financial firms, which have not always been subjected to similar oversight as local banks and credit unions. We're activating unused authorities to minimize regulatory arbitrage by non-bank firms seeking to gain a competitive advantage. We've shifted the focus of our enforcement program away from targeting small actors and putting more attention on large and repeat offenders. And since then, we've recovered $4.6 billion in refunds and penalties. We're handling an average of 10,000 consumer complaints per week and obtaining successful resolutions for individuals outside of legal proceedings. But equally important is our work to address how technology is transforming financial services. I think the U.S. has a choice. Are we going to harness technology to maintain and enhance relationship banking, drive more competition, and protect privacy, or will we continue our lurch toward a system marked by surveillance that is fully automated and controlled by just a handful of firms? The CFPB is working to ensure broad benefits for consumers and businesses alike when it comes to technological progress. One of our most important initiatives is to accelerate the shift in the United States to open banking, allowing consumers to more easily switch and gain access to new products while protecting their financial data. We've been leading a number of efforts in artificial intelligence, and we're working to bring more technical talent inside the agency. We're taking steps to guard against algorithmic bias, and we're working to ensure that data brokers respect longstanding laws on the books. The work of the CFPB in an age of big tech and artificial intelligence has never been more important. Thank you, Chairman Barr, for the opportunity to appear before you. I look forward to your questions.
Thank you, Director, and I'll now yield myself 5 minutes to ask some questions. As an FDIC board member, you were involved in the decision-making related to Silicon Valley Bank and its resolution. During the weekend of March 9th, did you express any views to FDIC Chairman Gruenberg, any member of the FDIC Board of Directors, any FDIC staff, or officials in the administration regarding the class of banks that should or should not be considered as a viable buyer of Silicon Valley Bank?
In a bank failure particularly, the most efficient way to contain any fallout is to ensure there is continuity. The Bank Merger Act specifically talks about financial stability. It was important if we had a viable buyer.
Did you express an opinion that a large Wall Street, too big to fail bank should not be in the class of institutions that would be eligible to purchase the bank?
I think we would have taken any potential buyer. We did not receive a bid.
Okay, I appreciate your answer, and I asked because when you were FTC commissioner, you submitted a comment to DOJ on bank mergers, criticizing those that occurred during the 2008 financial crisis. You opined, quote, policymakers compounded the damage by orchestrating several more mega mergers, forming even bigger banks, unquote. We also know you used procedural games in December 2021 to try to force a bank merger process review. Did you see the Silicon Valley Bank failure as an opportunity to take your personal views on, quote, mega mergers and implement them in a real-world crisis?
No, but what you're referring to, I talk about where there was tremendous government assistance. It was a different situation. We were faced with one of the fastest bank failures in history.
Yeah, Director, one more time. Did you in any way try to influence the FDIC's analysis of the bids?
We did not receive any bids that weekend for Silicon Valley Bank. We sought to get as many bids as possible. The FDIC's law requires minimizing costs to the Deposit Insurance Fund, and that's what we did.
Well, in your role on the FDIC, and we talked a little bit about this offline, some healthy mergers can avoid losses to the DIF. I want you to take that back to Chairman Gruenberg, and we need a better merger process to avoid losses to the DIF, and we can talk about that further. Director Chopra, in your new Abusive Acts and Practices policy statement, do you include the following as fitting into what will now be considered abusive and a violation of consumer financial law? And I'll ask that you answer yes or no. A pop-up or drop-down box?
I don't believe that by its own is any violation.
Multiple click-throughs?
I don't believe that by its own is any violation. I think there was used as a series of examples to look at material interference.
What about consumer confusion?
Well, that is part of the statutory.
What if it's unreasonable consumer confusion?
Unreasonable on the part of the consumer?
On the part of the
consumer.
consumer.
That would not be the issue. That would not meet the statutory standard. The standard has two prongs with some sub-prongs. One is material interference with the consumer's ability to navigate, and the second is taking unreasonable advantage.
What about customer support taking too long? Is that abusive?
Is that in the
See,
proposed
your
policy
confusion is
statement?
the problem. Nobody knows what abusive is. We still don't. If you don't know, and you're the director, and
No,
you issue the
I do.
guidance.
We have sought in the proposed policy statement to summarize all of the supervisory actions by state and federal law, as well as enforcement, to say, this is the body of law we have. We have a common law system in the United States.
Let me
and
just-
we are seeking to provide as much clarity to be responsive to
Just
many.
because I have limited time, these are examples that you say that you're listing, and you can't tell me whether or not these examples constitute abusive. And complying with these new additions, these examples to the abusive prong, mean that companies will now have to change the way they present information or manage customer services. This means that these institutions have new obligations, and you're not following notice and comment rulemaking, and you're imposing new requirements on these by listing
Completely
these.
disagree with that.
Well, I know you do. I know you do. If it's not new requirements, here's the problem. It's kind of like the Supreme Court Justice Potter Stewart in 1964 when he was asked to describe his test for obscenity. He said, "I know it when I see it." This vague and ill-defined guidance on what abusive means under UDAP sounds a lot like Justice Stewart's test for obscenity. Abusive is whatever you say it is.
It is not. And what we have done is, Congress wrote the words. It's in statute. We have tried our very best to be able to articulate with fidelity to those words, to give examples and facts.
My time has expired. You've tried, but respectfully, I think you failed. Nobody knows what it is.
please submit
It's what you
comments.
say it is, and that's the problem. My time has expired. The gentlewoman from California, Ms. Waters, is recognized.
Yes, your time has expired, and I certainly hope that you recognize that as I start with my questions. First of all, I want to go back to what the gentleman was implying when he asked you about what you said. Whatever you said had nothing to do with what the final results were that were accomplished when we were able to save this country from bank runs, et cetera. Would you like to take a moment to talk about how successful we were when over 48 hours, you guys worked very hard to ensure that when we woke up on Monday morning, the banks would be safe and secure, and that, again, there would not be bank runs. Give us, America, some example of the fine work that was done.
I think what happened that weekend was something we should never want to repeat and have to do again. We had to take emergency steps. The unanimous vote of the Fed board and the FDIC board, with the concurrence of the Secretary and the President, decided to insure uninsured deposits. It was extraordinary, and it is something we do not want to have to repeat. It was one of the fastest bank runs in history, pushed digitally. You know, social media, the modern age was involved. We are going to have to take steps to make sure that financial institutions can stay resilient even in these times of stress. I also think it woke people up to uninsured deposits, and there's more places where these uninsured deposits exist for consumers, and we need to make sure people know how to keep their money safe.
I thank you very much for reminding this committee of the good work that our government did in order to ensure that our banks are safe and secure. So I want to go to a question that I think needs to be given some explanation. I applaud you and the CFPB staff for issuing long overdue rules implementing Section 1071 of Dodd-Frank to provide transparency of the small business lending market. I worked with Congresswoman Velasquez and others to ensure that this measure was included in Dodd-Frank, and so that the same kind of transparency in mortgage lending could be made in small business lending. So, my colleagues on the opposite side of the aisle are quick to point to the burdens of data collection on lenders. Would you discuss how you took the concerns of small community banks and credit unions into account in the final rule?
Well, we made substantial changes from the proposal, including changing thresholds, which actually led, I believe, 2,000 of the smallest banks who do not do much small business lending to not have to report. We also changed the implementation period so the large ones would go first with much more time for the smaller ones. We sought to simplify it. The final rule allows small banks and others to work together with their industry associations to help with reporting. We did a lot to make changes, but we had to implement the statute as the court directed.
Thank you. Now, would you also discuss the benefits to small businesses of all types will see from this rule, particularly for LGBTQ small businesses? And won't transparency in this opaque market help make the market more competitive and reduce costs for all small businesses?
Well, certainly the Paycheck Protection Program was a real sign that the government really lacked, and the market also lacked details about patterns of small business lending. We see that with more mortgage data, you actually invite smaller players to enter the market to fit unmet needs. I hope this data set really is going to be able to be used also to identify opportunities, meet needs, and really work together with other rules that are currently on the books that people can achieve compliance with.
Thank you. One thing I'm focused on is getting more information about the type of government programs supporting small businesses, including SBA loans, loans in CDFI, made loans. I believe this kind of data would help Congress better understand the full impact those various programs have in supporting small businesses in underserved rural and urban areas and help us to strengthen them. Do you agree?
Yes.
If so, would you work with me on how best to design such a requirement?
We always want to work with you, Congresswoman, and much of those loans may be captured partially, but we will work with you.
I thank you very much for your presentation here today, and I thank you for always working with us on behalf of the people of this country.
The gentlelady's time has
yield back.
expired. The gentleman from Arkansas, Mr. Hill, is recognized.
Thank you, Mr. Chairman. Director, we're glad to have you before the committee today. And we're doing a lot of work, and we've done that under the leadership of former Chairman Waters and current Chairman McHenry in the whole fintech space and the digital future for financial services. It's a major mega trend, of course, across the world. And the building blocks of that future digital financial services space include cyber protection standards, digital identity, a favorite topic of my friend from Illinois, Dr. Foster, and privacy. And so I want to start out our discussion talking about 1033, the rulemaking that talks about open banking. In the last 8 months, the Bureau's released a SBREFA outline, which is the acronym for 1033, which sheds some light into the agency's thinking about the advance of a rulemaking I think that you're considering for October. Are you still on track for an October release of that rule?
Yes, sir.
Data privacy and enshrining consumer data rights are a top priority of Chairman McHenry, which is why this committee passed our Data Privacy Act a few months ago. So we have a keen interest in your views on open banking and this rulemaking. I thought it was notable that in your proposal, your initial proposal, that you were only covering deposit accounts and card accounts from depository institutions and weren't tackling or applying the rule to services provided by non-banks, even though the Bureau acknowledges that non-bank data providers offer numerous consumer financial products, mortgages, auto loans, et cetera. Can you tell the committee how you reached the decision to set the scope only at Reg E and Reg Z for your initial proposal?
Sure, and just to be clear, open banking is going to probably be one of the most important things we should all work on together. It's basically about the future of finance and how do we shape it in ways that is good for consumers, businesses, and others. Congressman Hill, we did not just include depository institutions. What we said was we asked industry, asked experts, what's the most valuable types of data to get? And what they said was it's transaction data, cash flow data. So by getting all of that transaction account information, and we include non-banks, I believe, in the SBREFA, we got input on that because that's what's going to give a mortgage lender, auto lender, others the ability to say, maybe this credit score I shouldn't rely on. Maybe I should look at their actual income and expenses. I think that's why we started there and very open to figure out ways to expand it, and I see this as a sequencing, just like other jurisdictions in the OECD have done.
Thanks. So we'll follow up on that. I want to make sure we get this right. This is something the committee wants to collaborate on. You also, in your advance notice on SBREFA, did not address liability for data breach. Key issue, I'm going to talk more about it if we have time remaining, for data breaches or data security non-compliance. So you've got a lot of comments on that. Do you expect the proposed rule this fall to include addressing liability for data breaches?
So the comments we got, I think institutions who are providing information, they want some understanding that if there is mischief on the other side, that they won't be held liable. When we propose the rule, expect us to address some of that
Okay,
so that we
good.
can make it clear for the
Thank you.
entities.
And speaking of data breaches, nobody has more data breaches than the U.S. government. It's a huge frustration for all of us on this committee, and recently even the CFPB had a former agency employee leak personally identifiable info and confidential supervisory information which could have potentially impacted 250,000 American consumers and 50 financial institutions. And whether it's this breach or the one from Office of Personnel Management back in 2015 or 2018, the Postal Service or the IRS, how in the world can we trust, can the citizens trust their government to keep their private information private?
It's extremely serious situation. We were dealing with an insider threat. Our systems were not breached or hacked, but we identified indicia that an employee had sent some emails to their personal email account. We immediately investigated.
Is that now monitoring so you can stop that from happening in the future? Or do you now monitor that more successfully in your internal?
We've already been implementing ways to address this, but I will share with you, the issue of insider threats is a really serious.
Well, let me share with you
tools.
that you and the bank regulators make that a living nightmare for every depository institution to make sure they do it right through internal and external penetration testing. And I think the citizens should demand the same of the federal government. I yield back, Mr. Chairman.
Gentleman yields. The gentlewoman from New York, Ms. Velasquez, is now recognized.
Thank you, Mr. Chairman, Ranking Member Waters. Director Chopra, thank you for being here today. I want to say that along with many of my colleagues, especially Ranking Member Waters, I was proud to sign on to the amicus brief and support the good work of the CFPB. I know that there has been some confusion about the Bureau's recent small business lending rule, also known as 1071, so I would like to clarify a few things. Can you tell me why the Bureau is doing this rule now?
Congress passed it in 2011 and the Bureau did not do it, and then a court order demanded the Bureau complete it by March 31st, and we did.
So it wasn't just the CFPB's idea or your idea, Director Chopra?
It was the legislative branch's idea.
Isn't it true that there were major, substantial changes between the original proposal and the final rule based on input from industry stakeholders?
Yes, and they have acknowledged that we made substantial changes, including that would reduce the number of local banks that would have to report. We have tried our best to accommodate and figure out a way to achieve the statutory objectives, and we tried our best.
Okay. Does the CFPB's rule require banks to ask customers about their race and ethnicity and sexual orientation?
The statute makes clear that a borrower does not need to provide that information. We did publish a sample form that institutions can use where borrowers can self-identify with checkboxes if they'd like to, but it is not mandatory.
And does the rule allow for customers to decline to provide that information?
Absolutely.
Aren't you allowing banks to partner with other banks and trade associations to fill out and report this data?
Yes, many of them can use consortia, third parties. If they don't want to ask, they can direct their borrowers to say, go fill this out over here. There's lots of flexibility because we heard those comments and wanted to make sure we were responding to them adequately.
Well, that all sounds pretty reasonable to me. Is it true that smaller banks have more time to comply with this rule?
Yes, we gave substantial extra time compared to the proposal for those that were smaller in the marketplace. We're actively working with vendors and others to provide and partner with them to figure out how to make it as smooth as possible.
And what else do you do in this rule to ease the compliance burden on small banks? Weren't some banks exempted completely?
Yes, we estimate that about 2,000 will not have to report under this. We visited with a lot of these associations and banks to figure this out. We were, again, under a court order to do it. We identified places where we could simplify. The way in which we are doing it is going to leverage technology. And again, we understand this will require some effort, and we want to work, but we have to faithfully implement the law that was passed.
So, Director Chopra, this requirement was included in Section 1071 because small business lending data is a critical tool to help identify and combat discrimination in small business lending. Not only that, but this data can ultimately help spur investment and programs to support the needs of America's small businesses. Can you briefly describe what benefits we expect to see from this data set and what benefits will have been seen if this had been in place several years ago as Congress originally intended?
Well, I think the fact that this was delayed so long, there's been cost to that. Efficiencies in other government small business lending programs, the Paycheck Protection Program, as I mentioned with Ranking Member Waters, I think we would have been able to make sure we achieve fair lending all over the country and know exactly what is happening to so many small businesses, franchisees, and more.
Well, as the ranking member on the Small Business Committee, I'm a strong supporter of the implementation of Section 1071. Thank you.
The gentlelady yields her time. The gentleman from Texas, Mr. Sessions, is recognized.
Mr. Chairman, thank you very much. Director Chopra, welcome to the Financial Services Committee. The CFPB has been engaged in and is engaged in, you mentioned it, a lot of data breaches. Data breaches that occur private sector, banks, financial institutions, and the government. What have you learned from those that you have taught the government?
Yeah. One of the things that was very unique to the recent insider threat at the Bureau is that we have put in a lot over the years. It was mentioned penetration testing, others, to make sure systems can't be hacked. We're now at the point where I think other agencies
Systems can't be hacked?
Well, that's where the efforts have gone in for outsiders, but insider threats, I think, is one where there is more attention that all of the agencies, including the CFPB, need to guard against better. A now former employee, emailed themselves a set of emails. This was in complete violation of acceptable use policies.
What did you do to that employee?
I'm prohibited from talking in specifics about personnel matters, but
Did you refer it for prosecution?
We have referred the matter to investigators, including the IG and others. We are cooperating with all of them. They have various authorities that go beyond our authorities, civil, criminal, and others, and that employee is no longer.
You think that a part of the breaches come from internal employees?
Well, in this recent incident that we informed Congress about, it was from a CFPB employee, and that is something that, especially with more devices, phones, recordings, we need to figure out.
What have you taught the government in your investigation to help them? Because I recognize that your focus is entirely on beating the stuffings out of the free enterprise system. But
That is
what
not
have
true,
you?
sir.
There's sufficient evidence to suggest that my statement would be true and yours would be also, sir. What have you taught the government?
Well, I think in this incident, we have been working with all of the appropriate agencies, OMB, others. I think as we've talked to the other banking regulators, we recognize that we all need to figure out, one, how do we ask and allow institutions to give us data in even more protected forms, and what do we do to police insider threats effectively? I think there's so much that government employees across the government have in terms of sensitive information, and ensuring that that does not get disclosed is absolutely critical.
Evidently, Homeland Security and to a large part, the Secret Service have large jurisdictions of investigating and prosecuting these. What are your regular conversations with them about what you've learned?
So we have primarily in these situations, OMB and other guidance says to work with the Inspector General, and of course, others like the Justice Department, you know, the FBI is under the Justice Department. We try and provide all evidence to them. They have to conduct their own investigation, but as a policy matter, I do think we want to contribute our learnings on insider threats, which may be, you know, an issue across the board that we all have to carefully combat, especially with new technologies that individuals have access to.
Well, Director, in fact, I think you and I, you're the director, I'm not, you and I could have different ideas about what we believe the focus should be, but I would hope that you could put a major focus of data security, off the things that you have learned, and be a leader in that field. I'm not arguing that you're not today, but I believe that a major focus of your 1,600 employees could be almost single-handedly across that until we defeat those that want to steal our intellectual property, our personal data, and other things. Mr. Chairman, I want to thank you for this time. Director Chopra, thank you.
Thank the gentleman. The gentleman from California, Mr. Sherman, is now recognized.
I want to strongly endorse one of the statements the acting chair made in his opening statement. Mr. Chopra, you are indeed continuing the legacy of Director Caudray in your work. Congratulations. The CFPB's importance is demonstrated every day. Nothing proves it more than the efforts, the incredible efforts made here in Washington to silence and defeat you. You are the most effective consumer protection organization I think the world has seen in the area of financial services. And it is critical that we win this case before the Supreme Court. I say we because I joined the ranking member and so many others in the amicus brief to make sure you get the same kind of funding that the Fed has had for well over 100 years. As you point out in your opening statement, you've secured $4.6 billion in refunds and penalties against violators, and that's just the tip of the iceberg. Because every time you collect a fee, you get many, many other companies to change their policies or not to engage in policies they might otherwise engage in. And as you point out, you deal with 10,000 consumer complaints every week. I want to thank you for focusing in your opening statement on two issues important to me. First, thank you for your work on the LIBOR transition, some $16 trillion of instruments, including trillions of dollars of home mortgages that are going through that transition. And second, you mentioned PACE lending. As to PACE lending, I want to commend you for your new regulation as required by law to require Truth in Lending Act disclosures and ability to pay determinations. But the battle is not over. The industry will fight back, and I hope that you stand strong. You, under Section 1071, are requiring disclosures on small business lending to women-owned businesses, minority-owned businesses, LGBTQI-owned businesses. And I know you've pledged to help lenders, especially small lenders, implement that rule. I'm told that some lenders have submitted questions over a month ago, and they submit into those designated mailbox, and they're not getting responses, so I hope you can go back and get them those responses. Credit repair scams are not just annoying television commercials. They charge you a lot of money. They just blanketly contest everything on your credit report. Your credit report then score goes up for a little while until they realize that most of those entries were accurate, and then it goes back down. What are you doing to deal with the scheme where you get your credit report improved for a little while?
Yeah, well, we're looking hard at all the ways in which consumer credit report issues can spawn scams. We have brought a number of enforcement actions here. We do work with the Federal Trade Commission, state AGs to bring actions, but we don't want to play whack-a-mole. We want to figure out what's the way that consumers themselves can know how they can dispute inaccurate information. We want to make sure that fraudsters are not parking or placing debt on credit reports that are not even owed. So there is a lot to work, and I know many on this committee.
I will furnish you one idea. When they start advertising about what percentage of their customers they improve the score for, they should not be claiming
That
temporary
claims.
improvements.
Yes.
Let's see, under Section 1031, you're dealing with privacy, data aggregators and fintechs are not subject to a lot of the federal supervision that banks are. What steps are you taking to protect Americans from the misuse of their data by data aggregators and fintechs?
Well, so we have started, as I mentioned in my testimony, to put more emphasis on non-bank supervision, especially these firms that touch sometimes millions and millions of consumers who have not been subject to similar supervision. We want to make sure that, that abuse that you mentioned, or that it's not collected for one purpose but monetized for a completely different one. It's going to be a challenge, but we're starting by making sure we're targeting our supervisory resources properly.
And finally, I hope that you would look at these for-profit debt relief agencies that keep you from talking to your bank first, because often you can resolve it with the bank.
Gentleman's time has expired. The gentleman from Missouri, Mr. Lukemeyer, is now recognized.
Thank you, Mr. Chairman. Mr. Chopra, welcome. Last time you were here, we discussed your schedule, about the fact that you don't meet with people from the industry. We showed your schedule to you. You made some comments about it. We said we sent you a letter and asked you to fill in the blanks and tell us that you actually did meet with people in the industry. You didn't respond. You responded to us with a letter, but you didn't respond and explain the lack of data in that schedule. So from that, I can assume two or three things here. Number one, the letter was to myself, Mr. Azinga, Mr. Barr. You thumbed your nose at us and said you're not worthy of a response, or else we were correct in that you're not meeting with industry people, as they tell us, or both, which I think that's probably the case. Very disappointing. Very disappointing.
Let me just say that there are many industry associations we have done.
Mr.
on above
Chopra,
and
we've been
beyond.
down this before. The problem is you don't meet personally. Your staff does.
No. I meet personally, and
No, you
since
don't.
you've
No, you don't.
given
Your
this
schedule doesn't.
feedback-
Your schedule doesn't back that up.
Since
I
you've
want to
given
move
this
on.
feedback
Please
many
allow
times
the
with
gentleman
dozens.
to answer the
Reclaiming
question.
my time, I want to move on to another subject here. One is regulation by, legislation by regulation. Director, you've clearly chosen to regulate by press release guidance and the threat of enforcement action instead of through rulemaking governed by the Administrative Procedures Act. As you know, the APA allows for public notice and comment on proposed rules, which gives regulated entities an opportunity to provide feedback and ensure their concerns are incorporated in agencies' rules in order to produce workable policies. Since public statements are not rulemakings or official actions, and the guidance you issue is not legally binding, are financial institutions and firms within their rights if they do not adhere to your proclamations?
Do not, I could not hear.
Okay. Since public statements are not rulemakings or official actions, and the guidance you issue is not legally binding, are financial institutions and firms within their rights if they do not adhere to your proclamations?
Yes, so guidance, advisory opinions, others, they don't create new obligations. So one of the pieces of feedback this committee has given is concerns about using enforcement only. So I have continued a practice from my predecessor, Director Kraninger, to issue more informal guidance
Okay,
and
so
opinions
you-
because
you-
it helps give transparency about what the approach the agency is taking.
Okay,
so
but
it's
it's
not
not in-
intended to create any new.
That doesn't answer my question, though. My question is, are the firms within their rights to not adhere to your proclamations or these guidance?
No, they have to follow statute and regulation.
That's not my question. They're within their rights then to not adhere to your proclamations and your guidance. Is that correct?
I think I'm trying to be responsive. I think the answer is yes. They only have to look to statute and regulation. That's
Okay,
what is
that's
binding.
right. Okay,
so
so you-
these other forms, we got input from the Consumer Bankers Association a few years ago that they wanted to see more
Okay,
guidance and
it's
advisory
clarification then.
opinions.
It's clarification that you're using these guidance and official actions with.
Well, I think what we're trying to do is the market is so dynamic and it changes so much. So we often have entities saying, do I need to hire a lawyer
That's fine to
figure
discuss
this
it.
out?
I know what you're trying to do, Director, but it's not enforceable. That's my
It's
point.
trying to restate existing law and
It's not
regulation.
enforceable. Is that correct?
That's right. I'm sorry if I
Guidance is not
miscommunicated.
enforceable, correct?
It does not provide any
Okay,
legal obligation.
clarifications through official documents, your bulletins here. That is not a compliance bulletin. That is not enforceable, correct?
That does not provide any obligation, so there's
Okay,
nothing to enforce.
so it's not enforceable. That's your statement. You agree with that?
Yeah.
Wonderful. Finally got to there. It's very disconcerting because you've got compliance bulletins here. I think there's 12 compliance bulletins and opinions, which is great. Gives clarification to folks. This is not enforceable. This is very concerning to me because you turn around and you threaten different entities all the time. You become the greatest extortionists in history of this country by what you're doing with these actions when you issue press releases, make up new words like junk fees. Junk fees is not a legal term. It is not an enforceable term. I've checked it with attorneys. I've looked at the people who design and work through legal, financial legal dictionaries. This is not an enforceable term. You made it up to give yourself more authority to be able to have more impact on things and extort more money from people.
I completely and respectfully disagree
Well,
with that.
I'm glad
Every
you do.
action we have taken is based on laws that this body has enacted, but through legislation.
Director, junk fees is not a legal term. It is not an enforceable term, period. Just like guidance is not enforceable. And yet you try and impose that on people, extrapolate from the UDAP authority, using the term junk fees to be able to have new authorities. You can't create authorities out of thin air. Only Congress can give you that authority, and you're creating it yourself. With that, I yield back.
Gentleman yields. The gentleman from New York, Mr. Meeks, is now recognized.
Thank you, Mr. Chairman and Ranking Member Waters. Thank you, Director Chopra, for being here and listening to some of this debate. I can't help but to say thank God that we created the CFPB, who was singularly focused, because I hear the interest of other groups who have people there to advocate on their behalf. Most of the industries and everyone else has someone to advocate on their behalf. What I don't understand is why it is so bad to have an agency of which you represent to advocate on behalf of the American consumer. Throughout history, we've seen the consumer be ripped off, taken advantage of so much. That's why we have to have labor unions, because we know and we've seen that folks on their own don't see or move in the benefit of everyday people. So there has to be someone to advocate on their behalf, to look at it, to make sure that the playing field is level for consumers, not to harm business, but to level the playing field, so that the consumer has a voice and someone there to say, don't rip us off. This is a bad product. I lived it in the financial crisis of 2008. That's why you're here, because we say we can never allow that to happen again. And one of the proudest moments of my career here is working with Ranking Member Waters and others to create the Consumer Financial Protection Bureau. So I thank you for doing your job. And your job is to advocate on behalf of consumers, no one else. That's your job. Singularly focused. Helping the American people. Helping the American people. And you help all, not just Democrats. You're helping the American consumer who's a Democrat, who's a Republican, who's an independent, no matter where they are, rural or urban. Thank you for doing that. Now, this recent bank failures of SVB and Signature and First Republic dominated the media and the media attention and this committee, particularly this spring. We had an opportunity to speak with the prudential regulators responsible for oversight of the institutions and continue to look at what could have been done to prevent the failures. But yet we've not had the opportunity to speak with you in the aftermath, the voice and the advocate for the consumer. So, from your perspective, how do the recent bank failures highlight the need for a strong CFPB now more than ever?
Well, as you referenced, in your own community and almost everyone's, the financial crisis was absolutely devastating. And the victims of financial crises, the first ones are often those who least can afford the shock. And so we had to take extraordinary steps to mitigate some of that damage, but also people are now learning about deposits and safety and insurance. And there are places where people may be holding their money that aren't insured. And we're going to obviously want to make sure that any instability in financial world, in financial markets does not impact the consumer, as you say. The failure of Credit Suisse as well and the forced merger with UBS was a big concern at the CFPB to figure out how could it affect our mortgage markets, our auto loan markets, and others. So financial stability and consumer protection absolutely go hand in hand.
Thank you. And so, one of the issues that I'm also focused on, and we also heard that the CFPB teamed up with the Federal Reserve, the FDIC, FHFA, the National Credit Union Administration, and OCC, to propose a rule designed to make the automated home valuation process fair. So I believe that it's taken in the right direction, but I'm curious, when we talk about AI, would this rule promote automated appraisals over human appraisals?
No, I think that it's trying to make sure that AI and algorithms, when used to automatically compute homes, do not bake in any sort of discrimination. And I think everyone deserves a fair and accurate appraisal, and that's what the proposal, which implements federal law, seeks to provide.
Thank you.
Gentleman's time has expired. The gentleman from Michigan, Mr. Heisinger, is now recognized.
Thank you, Mr. Chairman, and Director Chopra, welcome back. I got a number of things to hit here, but I was curious when my colleague French Hill was asking you about the breach. It struck me as it seemed like you were downplaying it. You said insider threat that you mentioned, but that person, quote, sent some emails. Later, to another question, you indicated it was a, quote, set of emails. Would you classify the incident that happened as a minor incident, a sort of medium size, or was it a major incident that happened?
It's an extremely serious and major incident. There's
Okay.
no question about that.
Great. Glad to hear you backing that up. I was back.
And I apologize. I don't want to underplay it in any way. We have done and looked hard to make sure we're following all the steps. We have begun notifications.
Yep.
Sorry.
I understand that. And I was back conferring with our attorneys as to exactly how much we could talk about publicly, because we don't want to get in the way of an investigation. I know you don't. I don't. But I do have some concerns. You were notified in March. Let the committee know in May about the what you now call a major incident, and we asked for a briefing on that. A briefing was granted at the staff level, but however, when our attorneys asked your briefers, I don't know who they were, maybe they were attorneys, maybe they weren't, but when they were asked basic questions like, quote, did anyone at CFPB speak to the individual? Staff from your agency could not answer the question and referred committee staff to speak to the Inspector General. Your staff explained the only reason why CFPB knew about the breach was from a different employee. You've talked about that. Committee staff asked about the identity of the other employee and about the circumstances surrounding the employee raising concerns. Your staff could not or would not give a single answer to any of these basic questions. CFPB staff emphasized that there was no reasons to suspect the information was disseminated, which I think we're all glad to hear, because as my understanding and what I've been briefed on, which I don't believe is public information as of yet, this was a major incident with significant consequences potentially. However, when they were pressed, they confirmed that the only evidence to sustain the claim was that so far there had been no suspicious activity. For a little perspective, I won't go into all that, but we all have seen what has happened with Equifax and others that have had, that you have been a part of, punishing others that have had serious data breaches. And I'm glad to hear you say it is serious, and I'm glad to hear that you are cooperating with law enforcement, but we also expect that you fully cooperate with this committee and Congress writ large and our subcommittees that are called oversight and investigation for a reason. And these are basic questions that we are asking, and we expect full and complete answers, and your staff couldn't give basic answers, and hell, sometimes there wasn't any answer, no answer at all. And it makes me wonder, and I'm sorry to be suspicious here, but I know how DC works. It makes me wonder, once again, your sort of dismissive attitude towards Congress that has come across in previous hearings and previous interactions, that did you send someone who intentionally didn't know what was going on so that they wouldn't pass that information on to us? Were they somehow opaque in their answers for some reason? So I'm not expecting you to answer that because I'm not looking for specifically a response, but I am making sure, once again, you are put on notice that we will be following up, and we expect our answers to be, or our questions to be answered. One last thing I'm going to pivot to. The Bureau's website provides a fund transfer request letters that you've made to the Fed before every quarter of the financial year and the Fed's response. To your knowledge, has the Fed ever denied your agency's funding request?
Not to my knowledge.
Okay. Has the Fed ever provided feedback on a quarterly budget request? Meaning, has the Fed ever told you that a request was too high or too low?
I believe the Fed's feedback is usually about when we should request it,
Okay.
because they manage
All right.
it for liquidity purposes.
All right. The last time the shared Fed and CFPB OIG did an audit of the Bureau's budget and funding process in July of 2020, it was done at the request of Chairman McHenry, and that was almost 3 years ago. Are you aware of any other oversight conducted by the CFPB's budget?
Yes, so we do have an audit by...
And my time is up, but I have a letter for the record to be submitted, Mr. Chairman. It was a letter that I sent along with your signature, and we wanted to make sure that that was regarding concerns
Without
with
objection.
FOIA
The time is
compliance.
And we will
back. Thank you.
The gentleman from Georgia, Mr. Scott, is recognized.
Thank you, Director Chopra. There are a lot of problems with this crypto asset fraud business. In November of last year, you all published a complaint bulletin filled with these complaints, fraud, theft, hacks, scams. All of them were significant problems. And your analysis suggests that the bad actors are leveraging crypto assets to specifically perpetuate fraud on American consumers. Excuse me. And from October 2018 to September 22, you all received 8,300 complaints. Director Chopra, has the CFPB determined whether certain vulnerable groups are at particular risk for these scams?
Yes, so I believe we specifically mentioned that older adults, it used to be more common, for example, for a scammer to ask someone, go buy me some gift cards, or, but we're now seeing it shift to a more digital and often using crypto assets. We've also identified a place where it has some interaction with identity theft, where it's not always crypto-specific, but service members can be targeted for ID theft in ways that can really expose them to certain harm. But
Let me ask you this, because we got to find some answers to this. The problems are overwhelming. You all have some great people over there at the CFPB, and we established this for a purpose, and we got to find some answers here. Let me ask you, will financial literacy, financial education help? This is being put on people that are having difficulty.
Yes, I think it's actually really important that financial education and literacy, we shift it so that it's really adapted to the digital world. There's lots of different ways in which digital technologies and with generative AI, we could have voice cloning in ways where it can sound like a family member is calling you. We could have different ways in which digital images can look like reality, and we want to make sure we can arm people how they can spot some of this.
Well, that's very good. With what you said in mind, Director Chopra, can this committee get, because we're concerned about this, can this committee get a clear commitment from you today that the CFPB will use a portion of the more than $600 million in unallocated civil penalty funds to support financial literacy, financial education for our consumers in a program this can get to? We got to arm our people with the weapons. They're the ones that are being targeted. We got to put some arms on them. Soldier them with the full armor of protection. Use this money. That's what it's there for. Will you commit to doing that today?
So we will commit to using funds for financial education purposes. We may use other statutory funds to do that. The fund you reference is also to be used for victims relief who are the victims of scams, and we want to make sure that they can receive payouts. We do have other funds, and we can share with you what some of our spending will be on financial education, but we may want to use our general funds.
But the priority ought to be to stop them from becoming victims.
I totally agree. But there are so many people whose lives are changed when they're able to get
can this committee get this commitment from you? I'm not asking you how much to use. I'm saying, will you use this money?
Well, we will certainly use funds that we have access to for financial education, but I would love to discuss further with you the trade-offs about using the fund.
Gentleman's time has expired. The gentlewoman from Missouri, Mrs. Wagner, is recognized.
Thank you, Mr. Chairman, and welcome, Director Chopra. I'd like to follow up on a line of questioning that my colleague, Mr. Luchtenmeyer, began, discussing the CFPB's industry outreach and specifically your public calendar. On February 7th, 2023, my colleagues, Mr. Luchtenmeyer, Mr. Barr, and Huizinga, sent you a letter requesting specific information regarding your calendar and industry outreach. In your response to their letter, dated February 21st of 2023, you stated, and I quote, "Like my predecessors, I have continued the agency's commitment to transparency through our long-standing policy of publicly posting the calendars of senior leaders." Director Chopra, it appears that your commitment to following this long-standing policy has been absent, completely absent this year. The CFPB's website states that each month's calendar will appear at least a few weeks after each month has concluded. But it's been almost 6 months, 22 weeks, since your calendar has been publicly disclosed. There's nothing here. Can you please tell me why your calendar has not been publicly disclosed for half the year?
I'm not actually aware that that's the case, but if it is the case, we will look to make sure that it happens in a faster way.
It is absolutely the case, and I'm just reading to you directly from a letter to Congress in response, dated in February 21st. So there are the quotes. It's concerning.
I will just share, though, that with respect to industry outreach, we have
I'm not asking about that.
feedback.
I just,
sorry.
I reclaim my time.
Apologize.
Would you say a 6-month hiatus of public disclosure is your way of showing commitment to transparency, sir?
Well, we would want to do that in a fashion that is responsive, and I will take a look directly.
Yeah, your own website, sir, states that, quote, due to the time-intensive preparation process, each month's calendar will appear on this page at least a few weeks after that month has concluded, and it's just clearly not true. Moving on. The comment period to the CFPB's proposal to adjust the safe harbor dollar amount for credit card late fees was just 36 days. And you received more than 55,000 comments, and they were submitted. Many were weeks prior to the deadline, which was May 3rd. The majority of which came from consumers, real consumers and retail investors. But they weren't posted in the comment file until a full month after the deadline closed. What was the reason for the delay in posting these comments, sir? Was the Bureau overwhelmed by volume, or did you intentionally delay the posting of these comments?
No, definitely not. When we receive large amounts of comments, one of the things that we do have to do manually often is to make sure it does not include account information. Sometimes people might be trying to file a complaint. We do not want it to be a vector of identity theft. And I will also just share 36 days from the time we published the proposal. There was more than 36 days, and I'm happy to get you
Well,
those.
I will tell you this. Then you should have had more than ample time to begin to post some of those over 55,000 comments out there in real time, sir. Because you don't wait until after to then delay it further. And I consider that intentional. And frankly, Director Chopra,
No,
I'm just saying.
absolutely not. We are trying to do our best to protect.
Reclaiming my time, sir, I'm seeing an extremely troublesome theme here. And that's what I'm trying to get to. You claim to be for transparency. I'm for transparency. But the blatant lack of timely public disclosure says otherwise. I don't care whether it's your calendar or you publishing comments. So I'd like to take a serious look at that.
I will make sure. I do believe we are in line or better than all our peer agents, or most of our peer agencies.
I'm concerned about what's your responsibility. The CFPB's credit card late fee proposal ignores the important role that late fees play in deterring consumers from paying their bills. If late fees are capped at such a low amount and the deterrent effect is non-existent, more consumers will pay their bill late, leading to a higher share of delinquent accounts, which will be reported to credit bureaus and result in lower credit scores. Director Chopra, I'm not going to have enough time for you to answer, but I'd like it in writing. Why is the Bureau proceeding with a rulemaking that has no consumer benefit and would actually result in tremendous harm to consumers?
The director can answer for the record, and it's a good question.
Thank you, and I
I now recognize the gentleman from Massachusetts, Mr. Lynch.
Thank you, Mr. Chairman. Welcome, Director Chopra. Good to see you again. And I do want to push back on the suggestion that you are not amenable to meet with industry representatives and business concerns, as well as consumer groups as well. I think you've been exceedingly accommodating on each and every instance, at least to my knowledge. I do want to put one quick issue before you. The Peterson Institute for International Economics defines junk fees as surprise charges that customers do not discover until they nearly complete a transaction, such as booking an airline flight, renting a car, checking out of a resort, or paying by credit card. Is that basically your understanding of what a junk fee would be?
I think it's a colloquial term that I also hear a lot about what are the fees that are not subject to real competition and competitive pricing.
Right.
So really ones that, may not be subject to the normal forces of shopping.
Right, and as more and more retail happens online, is the incidence of those junk fees on the growing or becoming
Well,
less?
each industry is different. I think we see, based on the empirical research, about where can firms be able to use sometimes drip pricing, where they can advertise one, but really the full costs or lifetime costs come later in the process when the consumer has less ability to negotiate.
Right, and I know the President Biden identified that in his State of the Union, and he called upon Congress to eliminate those hidden junk fees from consumers' transaction. I want to talk about something else. So there's been a real shift among financial services firms to use chatbots. And I know you've done some work on this. I know you issued a memorandum and just an executive summary on chatbots in consumer finance. What are we seeing out there? I know I'm just receiving, I guess it's anecdotal, but my constituents are complaining about the fact when they have a problem with the bank, they're getting hooked into these chatbots, and sometimes their problems are not resolved, which leads them to call me. And I'm just wondering, are we meeting our obligations to consumers when we allow banks to put a chatbot in an interface between them and the consumer that doesn't adequately resolve their problems?
I think this is one use of generative artificial intelligence we're going to start seeing more and more. And one of the things we identified is when a consumer has a very straightforward question, where's the closest branch, something that is a defined answer like in an FAQ, they may be able to get it. There is places where consumers have to provide a lot of account information, personal information. It is important that that information, if it's used to train AI, how is it being protected? When a consumer has to invoke a right to dispute, under the Fair Credit Billing Act, can the chatbot actually handle it? So we're just reminding institutions that if they're moving everyone to this, they still have to adhere to these important legal protections and make sure that they're not violating privacy and more. And it can really undermine relationship banking if not tailored appropriately.
Right. I understand the more basic questions could be dealt with by a chat box, and I'm sure that there are personnel savings there and efficiency issues that are certainly favorable. But as you mentioned, when matters become more complex, it doesn't seem at this point that the AI chatbots are capable of resolving those complex issues. Is there any thought of providing an opt-out where when the issue becomes so complicated that the consumer would have an ability to go to a default which would provide a human being on the other side of that?
Yeah, I think that's a place where financial institutions need to be careful about denying access to a human in some form because it can lead to real frustration and a doom loop.
Okay. Thank you, Mr. Chairman. I yield back.
Gentleman yields. The gentleman from Texas, Mr. Williams, is recognized.
Thank you, Mr. Chairman. Thank you, Chairman, for being here. I was just sitting here thinking that the consumer needs to be protected from the federal government, all the things we're talking about. And another thing, we've been talking about these bank failures. I'm from Texas, as you know, and I don't like Texas banks. I want to go on record with this. I don't like Texas banks, good-run Texas banks, bailing out bad-run California banks. I think that's really bad policy. Now, Director Chopra, the first time you came here before this committee, you said you would protect the interest of small business. And I proudly serve as chairman of the Small Business Committee, and I can tell you we don't feel too protected. And ever since you joined the CFPB, your agency continues to add burdensome requirements without any consideration of their impact on small businesses and small lenders. And when talking to community bankers back in my district, in Texas, and quite frankly all over and across the country, every single person tells me how miserable and terrified they are about the CFPB's 1071 small business data collection rulemaking. They are concerned that the complicated reporting requirements will tie up loan officers and increase compliance costs, plus compliance officers, which will be passed down to the consumer. Guys like me that borrow every day, we pay for all this. And they're concerned this will push the industry towards a standardized small business loan product and kill relationship banking, what is free enterprise and capitalism are based on. So, and everybody's concerned too that it's going to push the industry towards standardized small business loans and kill relationship banking, as I said, and they're concerned that this will force their employees to treat privacy an afterthought and collect more data than necessary on small business loan applications, which is what we don't want to have happen. Now, right now, small businesses are struggling with rising costs due to inflation, increased interest costs, and ongoing labor shortages, and this out-of-touch rule will only build on these issues. This is a hard time for small business. And the 1071 rule is an attack on Main Street America, and it's the only way you can look at it, which is why I introduced a Congressional Review Act with Congressman Barr and Ogles to halt the implementation of the CFPB's final 1071 rule. And Senator Kennedy is leading the Senate companion to this resolution, and it has the support of over 45 state and national financial associations, further proving the urgent need to block this regulatory overreach and ensure it does not take effect. It is bad business. It is bad for Main Street. It is bad for consumers. Now, Director Chopra, how have you been working with small businesses? How have you been helping them to ensure that your regulations are not causing any undue burdens on our country's small business owners? How have you been doing that? Because there's real concern they don't hear from you.
Well, one of the things we've done is we've focused a lot of our engagement on institutions we don't supervise. I've met with, I believe, 28 now state bankers associations that each of them have dozens of members to talk directly to me. We've done the same thing with credit union leagues. I believe we've hit 20 states in the District of Columbia. I just want to say, I take your points very, very seriously, and we tried to adjust the rule in ways that would reduce some of those costs.
So let me get my time back. You don't think it creates a burden for these financial institutions? You think it eases it?
We certainly publish what we believe will be some of the costs. We tried our best to figure out what are the ways in which we can limit it, and we also created and made significant changes that the smallest banks, 2,000 of them, will not have to do it. I hear you completely. We don't want standardized small business lending.
And it does trickle down to the consumer like me, the borrower. Let me ask you this, the CFPB's funding mechanism. We talked about it leads to very little congressional oversight of the budget, and instead your budget is given to you by the Fed. There are many more court challenges out there regarding your funding mechanism, and the actions of the Bureau do not comply with regular order, therefore creating more uncertainty in markets as everyone waits for the courts to decide. In order to ensure your accountability and transparency to Congress, it is imperative that your operation be subject to congressional appropriations. So, Director, if the Supreme Court strikes down your funding mechanism, will you be accepting of being subject to congressional appropriations?
Well, we will comply with any Supreme Court decision to make sure that we're following the law and doing so accordingly. We don't agree. The Solicitor General has filed a petition seeking reversal. There's conflicting opinions in the circuit courts, and we'll look forward to the result.
Let me ask you a quick question now. Lastly, CFPB fined Equifax for data breach. Did you fine yourself?
Well, I was not part of that. I'm happy to.
But have you fined yourself for what you?
I'm tell you more detail. This is an insider threat, a different situation, but it's a very serious one.
My time is up.
Gentleman's time has expired. The gentleman from Illinois, Dr. Foster, is recognized.
Thank you, and I'd like to thank my colleague for his admiration of the Texas banking system. However, we in Illinois have not forgotten the tens of billions of dollars that we spent bailing out corrupt and mismanaged banks in Texas and California during the savings and loan crisis. Okay, Director Chopra, some have argued that innovations in the financial services space, such as open banking, have the potential to facilitate consumer choice and increase access to credit for many underserved Americans in ways that our broken credit reporting system cannot. For example, open banking could provide access to a much wider range of consumer data than the credit bureaus currently access, which could give a more accurate picture of an individual's financial history, but it also provides the possibility of all kinds of bias to creep in. Now, the last time you appeared before our committee, you shared an update on the CFPB's Small Business Review Panel to advance proposals under Section 1033 of the Dodd-Frank Act. Could you give an update on that rulemaking?
Yeah, so we'll be proposing it. It's scheduled for October. We've released more on this, including the important role that industry standard setting will play. We want to make sure that standards are giving the ability for consumers and all market participants the ability to switch. And I will tell you, it's not just more access to credit, lower interest rates for borrowers, higher interest rates for savers. I think it's also going to have an impact on customer service quality too. When a consumer has the power to vote with their feet, you'll see how our system will give them better service as well.
Well, thank you. And thank you also for going on the alert early over the threat of generative AI being used for identity fraud. This is coming in, it's like a tsunami. Now, people that have looked at this identify two possible government interventions that could help consumers. One of them is to simply provision citizens who wish to have one with the means of proving they are who they say they are online, a secure digital identity. Sometimes referred to as a mobile ID or a digital driver's license. These are things that allow you to present you and your cell phone and your Real ID compliant driver's license to present digital proof in an online or an offline environment that you in fact are who you say you are. So that's one avenue that we can, I think, make a difference on. The other one are these so-called Blade Runner laws that are simply a requirement that any electronic communication coming from a machine must start by identifying itself as being machine generated. And so do you have any comments on either of those two and their
So I completely agree. This identity verification issue, I think if we can solve that as a core part of infrastructure in our country, we could actually reduce a lot of fraud as well. The benefits would be big also for market participants. How we actually do it, obviously, is the question. But you see jurisdictions that have solved that identity verification layer get a lot of benefits of it. In terms of stating who it is, it's very interesting. You're seeing a lot of generative AI, including chatbots and others, give themselves human names. This is in some ways to make it appear that they are an actual person. And with voice cloning, it really can simulate a human interaction. I do agree that there may be places where across the economy, some of this generative AI, there's a lot more we need to do, but people should at least know, are they talking to a human or not?
Oh, certainly, and you're going to see things where the regional accent or the ethnic accent is matched to what the consumer will trust. And so this is a huge problem. Well, first off, I want to thank you for the work that you did on the early versions of AI, trying to deal with the fairness versus accuracy problem. You did some really high quality work on that. But the problem we're now facing with generative AI and chatbots that learn as they evolve is much more complicated. It's sort of analogous to you raise your child perfectly, but then they get exposed to new things as they grow up that will make them do evil things that you never would have suspected. And so how do you anticipate you're going to be looking at AI that evolves and learns?
Yeah, so machine learning and other ways in which AI evolves, one of the things we're trying to do at a base level is be able to give information about how existing law applies. So for example, that AI needs to be able to determine if you get an adverse credit decision, what the reasons are. If it's constantly changing and it can't do that, it's not able to comply with existing law. There is not a generative AI exemption in our consumer protection laws.
Thank you.
Gentleman's time has expired. The gentleman from Georgia, Mr. Loudermilk, is recognized.
Thank you, Mr. Chairman. Director Chopra, thank you for being here. Chairman Barr mentioned something in his opening statement I'd like to start out with, and that's that according to your own data, 74% of Americans pay their credit cards on time. That is to say they never pay the late fees. According to your own proposed rule, however, cardholders who do not pay late fees will be paying higher fees, higher interest on interest-paying accounts, and will receive lower rewards because of the cross-subsidy. Under Section 1022 of Dodd-Frank, you are required to consider the cost of all CFPB rulemaking. And I can't see how this rule that rewards irresponsible cardholders at the expense of responsible ones is a net benefit. With that said, how did this rule survive a rigorous cost-benefit analysis?
So appreciate the question, Congressman. So what you mentioned, those were not predictive. That was potential scenarios we looked at. And the core of what we're doing—
What was not predictive?
The idea, there's potential ways in which the market could shift. So what I'm trying to explain is the core of what that rule review is doing is reviewing a congressional prohibition on unreasonable penalty fees. So what we're trying to accomplish is making sure, yes, if institutions have costs, how can they make sure that it is a reasonable cost? And we're specifically looking at the Fed's rule they put into place that we inherited, which did not have much data backing it, in order to make sure it's modern realities. No, there's still going to be late fees. It will just how they make sure that they're in line with the congressional prohibition.
So let me reclaim my time now. You said that the fees are reasonable. I mean, that's very subjective. Now, these are fees that the user agreed to when they took the credit card, because the fees, as you mentioned, do recoup costs, but they're also designed to be slightly punitive to stop bad behavior from happening again. What you're proposing is basically taking that away and then giving the punitive charge to those who are obeying the contract or the agreement they made with the credit card company.
No, that's not right. And I just want to make sure something is clear. Reasonable is not the CFPB's word. That's actually what is in statute. So the statute says that the penalties must be reasonable and proportional to the omission.
But did they not agree to whatever fee structure it was when they agreed to take the credit card?
That is true, but the reasonable and proportional is a separate prohibition. So again, one of the things that is in there is institutions can certainly be able to show why there's reasonable, and we proposed a framework.
But why are you even going this direction?
The reason why is because what we have found across consumer credit markets is it's not a fair and competitive market when an institution has an incentive for someone to default or be late. We learned the hard way about this with subprime mortgages, where an originator actually could benefit even if the borrower defaulted. Most credit card companies, especially small ones, don't have that business model, and our review is that they don't actually build a business model or profit more when someone is late. In some cases, a borrower, they might just be a day late or a few dollars off and get a very large fee. That's what Congress was seeking to prohibit, and we want a market where creditor really wants the person to
really what I see is we're intruding in what really should be the responsibility of the consumer because they agreed to go into this agreement. But, earlier this year, FHFA finalized changes to the loan level price adjustment tables that resulted in borrowers with good credit scores paying higher rates for their home. This is obviously unpopular with consumers. Aren't you concerned that you're sending the same message to consumers with this rule?
No.
With 75% pay theirs on time.
In fact, I think what this will do is actually help those compete on upfront pricing. So consumers are really smart in the credit card market. As soon as an issuer starts raising annual fees, they know how they look to switch. It's easier for them to know the full price that way. So what we're hoping to do is adhere to the congressional prohibition on unreasonable fees, which is the word reasonable is in the statute, while creating that ability for more competition up front.
No, thank you. My time is expiring, but I would think that consumer education would be more effective. And
Time of the
Chairman, I
gentleman
yield
has
back.
expired. The gentlewoman from Ohio, Mrs. Beatty, is recognized.
Thank you. Director, thank you for being here, and I'd like to start by thanking you for your work, your integrity, and your leadership at the CFPB to protect consumers. We've heard about the billions of dollars in consumer relief to the hundreds of thousands of Americans. And those Americans, would you say, are in all districts, Democrat and Republican districts?
All across the country.
Thank you. And that means that it ensures fairness, transparency, and competition in our financial system. So let me say for the record, Mr. Chairman, there is no doubt in my mind that consumer protection problems are rampant in our financial system. And I want to go on the record saying Americans would be much worse off if the CFPB was no longer able to continue its work. I have two questions I'd like to get through, but first, since there's been a lot of attention to your schedule and your time, it seems like we alternate terms or Congresses when we decide to pick on the individual or CFPB. Mind you, since I've been here and many of my colleagues on this committee, I remember when former Congressman, member of this committee, Mulvaney, said some of the most disparaging things about the CFPB and about the director at that time, Cordray, who he was replacing. Operative words. He went here, yet he took a job to be in the same position you're in. If we want to talk about integrity, if we want to talk about putting politics over people or maybe even money, but to his calendar, in the committee, he said he worked 3 days a week. Now, people are questioning you on a calendar. Do you work more than 3 days a week?
Yes.
And he said when he wasn't working, he loved watching baseball, and he put a TV in one of his office so he could watch baseball and protect our people. So if we want to talk about you being a extortionist, as somebody said, I want to use the word hypocrisy and enter it into the record for everyone on the other side of the aisle that chose to support beating you up on a calendar when you work more than 3 days. Now, let me get to my questions. We sent you a letter that I signed on to about Section 1033 rule of including EBT and other government benefit accounts in that rule. First of all, let me say thank you for responding to the letter, acknowledging that it was an issue and that you would continue to look into it. So I don't know if you have anything you'd like to add for the committee about these types of benefits being considered within the scope of the final rule.
So one of the things we're going to do is a bunch of these rules, mortgage products and others were raised before. With EBT and other government benefits, part of what we're doing is we're wanting to talk to the Department of Agriculture and others that administer these, because we really want to understand any technical issues that go along, but I completely share your view that all transaction accounts, we want that data to be able to be used to help.
Thank you. Let me move to my next. Since our chairman, McHenry, said we were going to put diversity in every committee, I'm a ranking on a sub, we haven't had a diversity hearing yet, but I'd like to commend you for 53% of the CFPB executives being women, 40% identifying themselves as minorities. Would you be willing to work with us or respond in writing where you are with contracting out to diverse groups, whether that's in legal services, contracting, et cetera? And that's a yes or a no for my time.
Yes.
Okay, thank you. And in fairness, Mr. Chairman and Ranking Member, that I'm giving equal opportunities, the director prior to you, Republican appointed, did hold meetings with Democrats and Republicans, did talk about diversity. So I wanted to thank her for the work that she did do, and I also think she worked more than 3 days a week. I don't know what her calendar was, but I want to commend you for the work that you're doing. And also, one of my colleagues said not much has changed. For the record, let me say, you could not receive 10,000 complaints weekly that you respond to. You could not do what you've done with AI. You could not do what you've done with algorithms. You could not do what you've done with bank failures. So again, thank you, and my time is up.
Gentlelady yields. The gentleman from Tennessee, Mr. Rose, is recognized.
I want to thank Chairman McHenry and the ranking member for holding the hearing, and Director Chopra, thank you for being with us today. And I want to begin by responding to Ms. Beatty and saying I actually preferred the way that Director Mulvaney ran the agency. Director Chopra, in CFPB versus Brown, the 11th Circuit Court of Appeals found the CFPB's assertion of work product objections to avoid identifying witnesses or facts supporting claims against the defendants to be egregious. The court held that the CFPB clearly violated Rule 37B and severe sanctions were warranted. Director Chopra, do you believe that the federal rules of civil procedure apply to the CFPB and its attorneys?
Well, absolutely.
Thank you. Yes, of course they do. So, Director Chopra, would you commit to reminding your staff and counsel that they are not exempt from the civil rules of discovery and that they must abide by them like the rest of us?
Yes, and can I just address that real quick?
I'll give you just a second.
Well, litigation often can be very, very heated. That was brought many years ago. There was this decision. Of course, in overwhelming number of matters, we have completely been respected by the courts for our
Thank you. I appreciate that commitment to make sure your staff understands that the basic rules of civil procedure do apply to the agency. Following passage of the Dodd-Frank Act, then Special Advisor to the Secretary of the Treasury for the CFPB, Elizabeth Warren, testified that the Bureau would be accountable to Congress. I have her testimony right here in front of me, and first, then Special Advisor Warren said the CFPB is subject to the requirements and limitations of the Administrative Procedures Act. But Director Chopra, isn't it true that you have routinely acted unilaterally and arbitrarily without engaging rulemakings in compliance with the APA, like you did with the update to UDAP section of the examination manual, or by using the Paperwork Reduction Act to seek approval for a junk fee timing study, just to name a couple? Second, then Special Advisor Warren stated that the CFPB, quote, is the only banking regulator that is required to conduct small business impact panels, close quote, to, quote, gather input from small businesses about the potential impact of proposed rules. Director Chopra, isn't it true that you have routinely bypassed the Small Business Regulatory Enforcement Fairness Act process like you did in your notice of proposed rulemakings for non-bank registries for repeat offenders and terms and conditions of form contracts?
No, we completely comply with all of it, and in fact, we published the analysis. We have solicited comment on the analysis. You've also mentioned Administrative Procedure Act. All of our work is reviewable under that law to suggest, and I've heard this suggestion now a number of times, that we don't comply with that. It's absolutely false. We seek to actually do and provide more information than, based on feedback from this committee, about how to make sure entities know what is expected
So specifically,
of them and to
though,
not
I would actively discourage you from using the Paperwork Reduction Act when the APA would be, I think, a fairer and more responsible way for proposing new rulemakings, and would criticize the agency for not, the Bureau for not doing that.
So the paperwork
Third, let me go on. Then Special Advisor Elizabeth Warren said that the, quote, checks on the CFPB's rulemaking are more stringent than the checks on other banking regulators because FSOC can veto any rule issued by the CFPB. Director Chopra, has the FSOC ever overruled a CFPB rulemaking, and don't you serve on FSOC?
Well, I believe the FSOC did begin some review many years ago of one that rule was set aside for other reasons. We have not had a voluminous number of them, but FSOC actually, they have absolutely have the power to do so.
They may have the power, but the truth is the threshold that has to be met is effectively impossible to meet.
It is unique among banking agencies, though. There is no other agency that is subject to FSOC.
But those other agencies have other checks and balances. Finally, and fourth, the Special Advisor Warren said the CFPB's funding structure is a significant source of accountability because it faces certain constraints by having to request funding from the Federal Reserve. Has the Fed ever denied or scrutinized the CFPB's director's budgetary response? I'll let you respond for the record. My time has expired. I yield back.
Gentleman's time has expired, and the director can answer for the record, and I would just remind members to direct their comments to the chair. With that, the gentleman from California, Mr. Vargas, is recognized.
Thank you very much, Mr. Chair. I direct my comments to the chair. You look great up there, sir. And of course, the ranking member always does. I would prefer her to be in the other seat, but it's been a pleasure to be here. Director, I think you've done a great job. I really do. And I think we owe you a great debt of gratitude. The hyperbole today has been actually rather remarkable. You know, I've been here for quite some time, and sometimes people say rather ridiculous things, but today was particularly fun. They said that you were the greatest extortionist in the country of all time. The greatest extortionist to the country. Is that true? Are you the greatest extortionist?
I obviously, it's offensive.
Of course it's offensive.
But I want to just say that we and our staff try to discharge our public service obligations faithfully and to the best of our abilities as we swear an oath to our Constitution and our country.
I wanted to give you an opportunity to react to that. Now, are you beating the stuffing out of the free enterprise system?
No, and in fact, we have made an emphasis about the importance of new entry, nascent entry, the ability for new players not to have to stumble through and hire so many high-priced lawyers. Our country benefits when consumers have more choices and when honest businesses are protected from those who violate the law.
Of course. Now, here comes a tougher question. You were accused of McCarthyism. Is it Kevin McCarthyism or Joseph McCarthyism? And what's the difference?
I'll withhold responding, Mr. Chairman.
Well, okay, we'll leave that for another time.
The gentleman, you will suspend. The speaker is protected, and so the gentleman will refrain from disparaging and using personalities.
I hope that will include the
I
ones on
certainly
his
will,
side of the aisle.
but the accusation was of McCarthyism. You heard it, I heard it, and it wasn't defined. So I wanted the definition, but I'll be happy to move on. I do not want to disparage the speaker in any way. In fact, we've been friends for 23 years, and I respect him greatly. Thank you. I do want to ask you about this. Most of the questions today on the other side have been about the industry. They seemed to think that the industry is not pleased with you. You don't meet with them enough, that they don't like you because of some of your policies. Is it your job to please the industry?
My job is to execute the objectives of the law, to enforce the law, and supervise for it fairly. We go overboard, and I think I've exceeded the types of engagement that some of my predecessors have engaged in. But yes, there are certain times, particularly when there are law violations, that there will be disagreements.
Of course there will. What is your duty to the consumers?
Our duty is to ensure, as the statute says, a fair, transparent, and competitive market, and to faithfully discharge.
And I think you're doing a great job. How much money has the have you, not you, your bureau, redirected back, gotten back to consumers? How much?
Over $17 billion.
And how many people has that affected?
Hundreds of millions.
Of course. And it's interesting that I don't get complaints from consumers, just the opposite, that you guys are doing a great job. And so I appreciate the job you're doing. Now, remittances. I want to talk about remittances. Remittances, I think, are a problem. And the reason for that is hardworking Americans and other U.S. Residents send money overseas. And when they do that, they don't know the full cost of those remittances. They're not easily understandable. And I think it's something important for your agency to work on.
One of the things when you go get a disclosure, sometimes these remittances can be advertised as no fee. But in reality, the exchange rate might be adjusted so it doesn't look like there's a fee, but there is really a cost to it. I also want to say, Congressman, that other nations, developed countries, have started thinking about, through their central banks, ways in which consumers and small businesses can transfer money more easily. There is some work between, I believe the Fed has an arrangement with the Central Bank of Mexico. We should look at more partnerships like that to have lower costs.
And lastly, we did talk about diversity. I did look at the numbers, however, and it looks like when it comes to, I think this is your semi-annual report, when it comes to Latinos, the percentage is actually quite low. And I hope that you're taking a look at that.
Yes.
And I'll let you answer if I have enough time, but I do want to make this comment. You know, it is interesting. Every time I come here, I hear the accusations that are placed against you or others on the other side. There's never protestation from the chairs. I never hear it. And then when you're defended, there seems to be protestations. I don't think that that's fair. I think you're doing a great job. And I hope that we're a little more careful with our language around here when we accuse people of McCarthyism, extortionism, and all these other things for respected people like yourself. I yield back.
Well, I appreciate I'm happy to follow
Gentleman
up.
yields. Time has expired. The gentleman from Pennsylvania, Mr. Muser, is recognized.
Thank you, Mr. Chairman. Thank you, Mr. Chopra. So, you know, I talk to a lot of banks, small banks, under $1 billion, $5 billion, regionals, super regionals, throughout Pennsylvania, the big guys on Wall Street. And they're really not happy with your agency. So let's just start there. I mean, across the board. I mean, the largest banks down to the smallest have many concerns. So, you know, the idea that the CFPB is doing a great job is foreign to me, okay? Because every single bank I talk to, I'm not talking about, 3 out of 5. It's like 19 out of 20. So I assume you got some sort of reviews taking place, taking information in on your final rules and be responsive to the clientele that you're supposed to be helping.
Just to be clear, the clientele of the CFPB is not banks. The clientele is the public. And often, it is true, there will be differences with entities that we
Who serves the public?
Supervise.
Do the banks serve the public?
Of course, they have important public
So
matter.
they're a link in the chain.
Of course, and we want those who follow the law to be able to not get a disadvantage by those who don't. And I hear your concerns, but at the end of the day, we have to make sure that our consumer protection objectives.
You're going too far. Now let's even talk about the 1071 that keeps coming up. Okay, how somehow that's wonderful. Okay, I had a small business committee hearing the other day, and we had 4 Republican and Democrat witnesses, and they all thought it was terrible, that the type of questions that needed to be answered. Now, I know in the final rule you retracted some of the insane information that you wanted to derive, not making it required. But you're asking banks to ask really personal information on people's race, on their sexual preferences. I mean, where does that fit into looking out for the public good?
So that's a statutory directive. So we were under a court order to implement Section 1071 of the Dodd-Frank Act. It requires collection of information on race and other categories. Again, I appreciate that those are types of questions that sometimes are difficult. We try to work with the industry to figure out what's the best way to limit some of that.
If you actually would do that, work with the industry to figure out the best way to provide guidance and oversight so as they can handle and serve their customers best. But honestly, it doesn't sound as if you're doing that. I was in the business world, okay? The more you talk to your customers, the better of a company you become. Now, so that's on 1071, but there's also 13 data points, Statute requires the collection reporting 13 data points, while the rule requires 81. So there's a lot of concern from banks, small banks, primarily community.
Let me just make clear, there's not 81 data points. There's a difference between data fields. So what we're trying to do is create a
I'm going to reclaim my time. If it's not 81, then if it's, is it 50?
No, I believe it's about 19, 20, something around.
All right, then perhaps I stand corrected. That's the information I have. Let me ask you about screen scraping. All right, it should be addressed in 1033 rulemaking. Fraud is a serious problem, as we all know. Is this something that, can you update the CFPB's approach to screen scraping? And can 1033 rulemaking address this practice?
Yeah, I actually think we can. I think we can set the stage for making sure screen scraping is not going to be part of our financial infrastructure in the future. I think it's a place we should all talk about, because I do think that screen scraping is not really a viable long-term way for data sharing.
Great, very happy to hear that. And I'm just going to go back to 1071 really quickly. If you all could just do some sort of analysis on the compliance costs, primarily for small banks, because that's where they amount and they're more of a percentage of their operating costs. If you all could do that, and maybe we could talk about that, I'd appreciate it.
I'm happy to talk to you about it, including where we've created some changes and hurdles. But yes, let's talk about it.
Great. Thank you, Mr. Chairman. I yield back.
Gentleman yields. The gentlewoman from Texas, Ms. Garcia, is recognized.
Thank you, Mr. Chair, and thank you, Director Chopra, for being here with us today. It's always good to see you. I'm always glad to get an update from you, given your relentless commitment to protecting our nation's consumers. Under your leadership, the CFPB has successfully worked on junk fees, medical debt and credit scoring, housing discrimination, and many other major issues. I have enjoyed reviewing your report. It's excellent and certainly is reflective of the fine work that you are doing. I'd like to make sure that all Americans understand just what it is you're charged to do. I reviewed a useful fact sheet about the services that you offer our constituents, like free credit reports, protection from scams for older adults, which is really key in my district, help with surprise medical billings that impacts so many Americans across our country, and resources on mortgages and borrowing. I want to make sure that the word is getting out effectively, and I want to know how the Bureau makes sure that all Americans are aware of all this service, because there seems to be some confusion here as to exactly who you're there in charge to advocate for. So can you provide us some more information on just exactly what your mission is?
Yes, we are there to make sure that the consumer financial protection laws are followed. We're there to make sure that consumers can file complaints and get it resolved. We're there to take enforcement actions to help those who've been ripped off. We have gotten refunds for tens of millions of Americans, and our work has helped so many more. Our job really is to give consumers the ability to have a market that really works for them.
So you're there to help consumers when they get into a challenge with any retail outlet, a bank. This is not an anti-back operation. I mean, you're there to help a consumer with a number of entities and all their transactions. And I want to tell you, I am thoroughly impressed that you handle 10,000 complaints a week. And I know that you reviewed 745,400 complaints just to make sure that the companies that you make the referrals to are responding effectively and really responding to the complaint. So thank you for that. And I can tell you that I would hope that all our agencies are that responsive to complaints and get to them as quickly as you do. So thank you for that. I also, like Mr. Vargas, did make note, however, that in your workforce report, that Latino representation does fall short. The CFPB workforce is only 7% Latino compared to 13% to the benchmarks of the United States Census National Civilian Labor Force. Further, Latino employees make up the lowest percentage of new hires at 3.6% compared to all the other groups. Can you tell me today, Dr. Chopra, what you will be doing to fix this problem?
Yes, we have a number of things in motion to make sure that we are attracting a diverse workforce at all levels. We're very proud that we have senior Latino employees at the highest levels as well. So I'm happy to discuss with you more further in detail, but we want to make sure we're reaching everybody, that everyone has an opportunity to work for us. And I will say, making sure our workforce is reflective of the country will also help us give us more connection to really the people that we serve.
Right, well, Latinos are the fastest growing minority group in this country and certainly have a big market share in terms of the growth in as consumers, so thank you for that. We'd also like to make sure that you're committed to working on this problem, and I will follow up with you, of course, in the future. So let's turn now to the small businesses, because that's another area where Latinos, especially Latinas, that's the highest growth area. You know, the issues with your lending rules, can you please clarify why it's critical for the CFPB to advance rulemaking on lending?
Well, part of the reason we implemented this statute as required is to make sure that we have good data and the government and the public has good data about those trends. You're right, there are so many immigrants, minorities, others who start businesses, franchises and others, and that data I think would have been critically helpful in Paycheck Protection Program.
Okay, just a quick one. How are we doing on the language barrier issues?
I will update you, but we're making progress.
Okay, good, thank you. I yield back.
The chair now recognizes the gentleman from South Carolina, Mr. Timmons, for 5 minutes.
Thank you, Madam Chair. I want to get back to the data breach that Congressman Huizenga discussed with you earlier. Can you describe how the CFPB found out about this breach?
So another employee identified a specific indicator. It was reported to our team. We brought them together.
The breacher CC'd their manager in an email, and the manager caught it. Is that correct?
I don't want to go into anything related to the investigation, but it was another manager.
And how long between that manager pushing this breach up the chain did you notify the 250,000 Americans and 45 companies involved in the breach about their exposure? How long did it take?
So with this, we found some documents that did have consumer names, no information like.
Was it 24 hours? Was it 72 hours? Or was it like 2 months?
Well, we didn't have their contact information.
So you had their personally identifiable information, but you didn't have their contact information?
Yeah, we just had very few pieces.
But you didn't notify the companies like you probably should have.
We
best
did.
practice.
Yeah. So what we did is we partnered with the companies whose customers.
How long did it take you to partner with them?
I can look at the timeline, but as soon as.
Was it 72 hours? The answer is no, but I mean, it wasn't 72 hours.
I think we tried our best to identify where we had.
Okay, so it wasn't 72 hours. And again, you're responsible for enforcing cybersecurity breaches. And if a company.
We are not actually.
Well, you sue, you have.
But we do not enforce breach notification laws.
Correct, but when you fine companies for violating best practices, those companies are considered to be in egregious breach if they do not notify the consumers that were breached within 72 hours. We'll just move on.
No, that's not accurate, but I'm happy to follow up.
Okay, so if a company's breached and they don't notify anybody within 72 hours, you're not going to consider that an aggravating factor in whether to fine them and how much?
Well, so generally speaking, the safeguards rule that governs financial institution breaches is enforced by other agencies. They're separately.
Okay, so let's just.
But let me just say, though, this is a very serious issue. We have
Please allow the gentleman to answer the question.
If he would answer the question.
It's the gentleman's 5 minutes.
Okay, so I find it an egregious breach of best cybersecurity practices to have this information available to this individual in the way that it is. Do you believe, in retrospect, that the information should have been siloed and it should not be easy to email a document? I mean,
so we're looking at making sure we already have systems in place so that there is not the ability to transfer that. The issue can sometimes be is when there's communications with the entity. So sometimes that is ingested in.
How many people have been fired because of this data breach?
Will the gentleman pause for just a moment while we fix the clock?
Sure. I think I was at like 2:40.
Do we know how much time?
2:40.
How much time was left?
The gentleman can continue.
Okay, thank you.
You want me to answer? Yeah.
It's really concerning that you have this color of law, this theoretical authority to force these businesses to give you this information, and then you are unable to protect it, and the individuals that have been breached, they have no recourse. They're not going to get some settlement. They're not going to get any money. I already have a number of instances where people whose data were breached, these criminals have filed unemployment insurance claims, and they have already had they've already been damaged, and there's no recourse because you're a governmental entity operating under the color of law. And I say operating under the color of law, obviously, because there's a Supreme Court decision that we're expecting here pretty soon. What would you tell the individual that has been damaged by the CFPB's incompetence as it relates to this cybersecurity breach? What is their recourse? How will they be made whole?
Well, so
are you going to write a check?
This is a very serious issue, and one of the things we're doing is for consumers who are customers of the entity, we are working with the financial institution to figure out.
Are you going to make them pay for the breach?
No, of course not.
Of course not. You make other companies pay for the breach.
Please allow the gentleman to ask the question.
It's the gentleman's time.
So you're not going to write a check to make these people whole?
We are working with the institutions, and fortunately, the information that was transferred on an unauthorized basis did not have indicia of risk of identity theft. But I take your point that, of course, the data that is collected must be protected. This was a serious problem. The employee that was responsible, I can't go into details. They are not currently an employee.
I'll reclaim my time. Is that the best way to do it? So, Director Chopra, you are required to appear before this committee twice a year, meaning we will likely see you again in about 6 months. And with the pending Supreme Court decision on the constitutionality of the CFPB, it may very well be your last appearance before our committee. Please try to do the least amount of damage as possible between now and then. The American people would really appreciate it. Consumer Protection Financial Bureau. The 250,000 consumers are not protected. You cause them damage, and they will never be made whole. With that, Madam Chair, I yield back.
The gentleman's time has expired. The gentleman from Illinois, Mr. Caston, is now recognized for 5 minutes.
Director Chopra, nice to see you again. Thanks for coming in today. We have, this is in some ways not at all germane to today's hearing, but we've now got a whole subcommittee focused on crypto issues and lots of bills that we're discussing about where to regulate the crypto industry. I'm not going to ask you to opine on all that, but I do, it did catch my eye that you just issued a 2022 complaint bulletin looking at complaints related to digital assets. And if I've got this quote right, it says that you found that fraud, theft, hacks, and scams are a significant problem in crypto asset markets that appear to be getting worse. That was a year ago, and so I would welcome your thoughts on is that still true, and would you care to elaborate on what you found in that bulletin?
We're going to do another look at that data set again. I guess I would say this is that fraudsters are trying to use methods of payment that are hard to track. So gift cards was a really common one before. There's other ways in which they've used, but the more in the digital world, we're seeing that crypto assets, in some ways they might tell an elderly person, go buy this and transfer it to me. It can be done without the person going to a superstore or a department store to buy a gift card, which means it can be faster, it can be bigger amounts of money, and that's certainly something we want to figure out about how we can stop and protect those individuals who've been defrauded in a world where identity verification is challenging.
And when you say we, I'm assuming you're referring to the CFPB.
Well, frankly, law enforcement, the DOJ, others, fraud against older Americans in particular has been a pernicious problem.
But are the crypto asset platforms working with you? Are they constructive partners in this?
I can't, that hasn't been a place where we've invested much effort on it. The way as I understand, and I can ask our staff, I understand that it's being transferred outside of those platforms. So that's not been a place where we've engaged.
Well, I mean, following on the prior question, I would assume that they have a lot of the data and they could either be constructive or not. Is there anything we can do to help and offline? Welcome thoughts on it. And you mentioned elderly. Is the concern primarily with elder consumers who are being targeted, or are there other consumer groups that you're watching?
It's disproportionately those who are older. That's not to say that people of all walks of life, especially when voices can be cloned, there's lots of ways to impersonate now. But certainly romance scams, dating websites, that is a place where elderly and others are targeted. We have some evidence to suggest that those who are widows and widowers are more likely to be. So,
Well, appreciate your support. You know, I'm reminded that I think probably about 3 years ago, your predecessor sat here and, in spite of repeated questions, refused to acknowledge that the CFPB has an obligation primarily to look out for the interests of consumers. And I am grateful that we are prioritizing those interests. Out of curiosity, have you ever done the math? How much money do you think the Bureau has saved consumers since its inception?
well, just in refunds, it's been $17 billion, but in terms of the reforms of the mortgage market and others, the ability now to get a competitive mortgage, it's totally different now, and it's hard to put a number on it. The ways in which I think we have stopped certain actors from engaging in system-wide harm, we don't have a dollar figure, but the benefits are very, very big.
And you know, we certainly tell stories about, you know, in our office, we hear stories of from a constituent services, the veterans who are helped, the elderly that you mentioned, the folks who are not as proficient working through these. Are there particular classes of consumers who you think most depend on the work you do?
Well, it's funny. The other weekend, I was in Virginia and was stopped at a restaurant. We had done an event at a local military base, and as someone in the group that attended had mentioned, you know, they had just gotten a $5,000 check. We occasionally hear from people who really were ashamed and thought that it was all their fault, but they were actually sometimes a victim of a scheme and got, you know, over $10,000 back. Some people have gotten their homes saved. So it's not just the financial piece, it's also a huge amount of dignity for them.
Well, I appreciate it. I'm out of time, but I hope you don't take personally some of my colleagues' attacks on you. The idea of looking out for veterans and students and the elderly may be partisan, but I'm glad you're
The gentleman's time's expired. The gentleman from South Carolina, Mr. Norman, is now recognized for 5 minutes.
Thank you for coming, Director Chopra.
Thank you.
On the civil investigative demands, which a lot of the businesses that have been subject to it have said it was ill-defined, it was onerous. Do you have an idea on actions that did not result in enforcement action? The amount of money and time that the firms have had to bear to produce the information?
Yeah, I don't have that offhand, but you raise a good point, which is what is the ways in an investigation to get the information to ascertain if there's a violation without it being costly or frankly taking a lot of time. This is especially concerning for...
Let me
Sure.
reclaim my time. Prior to that, do you require, is the CFPB required to provide the company with credible evidence that there's been a violation of the law prior to serving a criminal investigative?
So the statute is consistent, I believe, and actually may be enhanced compared to other CID authorities around the government. We're required, I believe, to state a notification of purpose that really gives a sense of what we're looking for.
Is it law? But can you cite the law that's been violated before you do a CID?
Yeah, in the notification, we'll sometimes be able to describe the particular type of violation that may
All the time or just sometime?
I would need to check.
Could you get back in writing with me on that?
Sure.
Now, on the Fair Debt Collection Practices Act and the Fair Credit Reporting Act, you know, they're basically silent on the treatment of medical debt and if that differs from any other debt. The CFPB has drastically altered the collection of medical debt, unpaid medical debt. Now, what in the Fair Credit Reporting Act gives the CFPB authority to encourage furnishers to report inaccurate information about legally owed and legitimate debt?
Actually, no, it's just the opposite. Our push is accuracy. So the Fair Credit Reporting Act requires reasonable procedures to assure maximum possible accuracy. There actually is a provision that is related to health as well in there. I think
So you're not altering, you don't have, the CFPB does not have efforts to rewrite portions of the Fair Credit Reporting Act as far as the reporting of unpaid medical debt.
Well, the statute is Congress's to change. When it comes to accuracy of furnishing on credit reports, that is an incredibly important responsibility for the enforcement agencies, the states, and others. We do not want the credit report being a way to coerce people into paying something they already paid or didn't owe in the first place.
So you're basically hands-off with trying to rewrite that, as I stated.
Well, we cannot rewrite statute.
Or-
We're trying to administer the Fair Credit Reporting Act, enforce it fairly, and there are real problems when it comes to the
All right, let me ask you
reporting of
this. On the
inaccurate medical
$8, I think they've been called junk fees, but the credit card late fees, in your rulemaking, you say that it's not a cap, but persons need to show their work to get to approve the fees that are charged. How do you define that?
Yeah, it's not
What
a
process?
pre-approval. What we have done is put in the proposal, and the same thing exists currently in the Fed's rule promulgated over a decade ago, that if you don't want to use the immunity provisions, where you don't have to show any work at all, you have to spell out your calculations based on what it is. As one of your colleagues mentioned, the statute says the fees must be reasonable and proportional.
Reasonable as defined by who?
Well, it could be through case law, but one of the things we're trying to do to provide clarity and predictability for businesses is to spell out how they can make sure they can comply with it. When Congress passes laws with words like reasonable, it can be a benefit to businesses that they know how that's going to be interpreted.
How does that
That's
differ?
what we try and do all the time.
Yeah, but reasonable is kind of like beauty's in the eyes of the beholder. The criticism of the CFPB is the fact that it's vague. People are getting hit with suits that they don't or with CIDs that they don't understand. It's just vague as interpreted by the CFPB.
That's exactly why we've tried to provide more advisory opinions and guidance so that people know what is expected of them without creating new obligations.
Well, I was just, this country's, the small business is under tremendous stress now, and I would just, please, don't, I yield back.
The gentleman's time's expired. The gentlewoman from Massachusetts, Ms. Presley, is now recognized for 5 minutes.
Thank you, Director Chopra, for joining us today. Thank you for the critical role that you play, the CFPB plays in protecting consumers and holding bad actors accountable. I'm grateful to you and your dedicated 1,500 plus employees. Tomorrow is actually World Elder Abuse Awareness Day. And my mother for many years was a social worker to the elderly, trying to protect them from elder abuse. And so I did just want to take a moment in particular to thank you for all that the CFPB does specifically around fighting elder fraud, exploitation, and abuse. Thank you for all that you do for our most vulnerable veterans, seniors, and students. Speaking of another vulnerable group, Director Chopra, a recent New York Times review of hundreds of federal lawsuits filed against tenant screening companies highlighted how a pattern of inaccuracies in these reports led to the denial of rental housing for people across the U.S. What problems has the CFPB found with tenant screening reports and the impact they can have on finding affordable, quality housing?
I think when someone is falsely matched with the wrong report, it's almost like they've been given a different identity, and that can be relied on to foreclose them from even accessing rental housing. And in some cases, we've heard of it leading to homelessness. We have to make sure that when there's these third-party dossiers collected about people, that they're actually accurate. We have found, Congresswoman, that people with common surnames are more likely to be victim of this, and we have to make sure the law is being followed.
Thank you. So clearly a lack of regulation in the tenant screening industry is resulting in an and inaccurate reports and false information, in particular about people's criminal backgrounds. However, when the reports do include accurate information, housing providers often use them to deny housing to people with a record. 70 million people in the U.S., 1 in 3 adults, have a criminal record, which means the impact of this discrimination is severe and widespread. Formerly incarcerated people are 10 times more likely to be homeless than the general public. And this is not a coincidence. It's a policy choice, one with dire consequences. Director Chopra, is the issue of denying housing to people after they have completed their sentences a problem that you have heard about?
It has, and I think that's a place where the Department of Housing and Urban Development, Justice Department have also been working on.
Thank you. When formerly incarcerated people do not have stable housing, it's harder for them to access health care, secure a job, pursue greater education. Additionally, a lack of stable housing can lead to crimes of necessity to meet basic needs. So the cycles of recidivism repeat. That is why today, myself and Representative Tlaib are introducing the Housing for Formerly Incarcerated Reentry and Stable Tenancy Act, or the Housing First Act. Our legislation would disrupt the prison to homelessness pipeline by regulating what information relating to a person's criminal background should appear on a tenant screening report. Director Chopra, do you agree that by regulating the tenant screening industry on this matter, we can improve access to affordable quality housing and confront the prison to homelessness pipeline?
I think what you have said about the disruptions about return home and not being able to access a home are so serious. I look forward to working with you on that. And there's so much at stake to make sure that people who have served can really successfully reenter.
Thank you. Again, thank you for what you do day in and day out to protect consumers and to hold bad actors accountable for the harm they cause our most vulnerable. And thank you for your expressed partnership on this matter. Housing is a human right, period. And when we deny stable housing to people with criminal records, we wrongfully punish them after they have already completed their sentences. Our bill would remove unjust barriers to housing and affirm that safe, stable housing is essential. Thank you, and I yield.
Gentlelady yields. We'll now go to Congressman Davidson.
I thank the
for
Chairman.
5
Thank
minutes.
you, Director, for being here. And I thank my colleague previously for concerns about people who've served their sentences and done the time for their crime. It wasn't the question I was planning to lead with, but it's a good segue to something I sent a letter to you on in April, and I appreciate your response. Your response really dealt with the accuracy, and I think everyone wants them to be accurate. We don't want someone to be falsely denied residence. We also don't want someone to come in who maybe should have been screened out. So we want accuracy, but I mean, fundamentally, do you believe that tenant screenings are valuable to landlords?
I think when they're fully accurate, it has a very different benefit. You know, there are ways in which people can get information about a tenant, but I will tell you, the Fair Credit Reporting Act has accuracy standards, and I want the tenant screening industry to follow them carefully.
Yeah, I agree they should be accurate, but sometimes the quest for accuracy is really just using the law to prevent people from doing screenings in the first place. And look, we had a great second chance program in the businesses that I owned prior to coming to Congress. I'm passionate about, you know, kind of the second chance program. Once you've served your sentence, you need to be fully integrated into society. Otherwise, they got the sentencing wrong. And so, you know, but it is a valuable thing. And the whole point of it, it started with trust. Somebody was honest about their background.
Yeah.
We checked it. It matched. Now we've built trust. I think it can be important. Turning to things that we probably are more aligned on, I was pleased even in your opening remarks that you talked about data brokers. And, you know, when you look at common concerns that we've had that have been bipartisan about privacy, you know, American citizens have had their data stolen, hacked, sold, and otherwise exploited. So I was encouraged on March 15th that the CFPB announced a request for public input regarding how data brokers collect and sell personal consumer information. Last week I saw that you even extended the comment period to July 15th. Could you give us an overview of what you're seeing so far regarding data broker industry and how they collect and use personal consumer data?
So, you know, in the 1960s, this committee, I believe, at a different name, was concerned, and other committees, about all of these firms creating dossiers about us. And the Fair Credit Reporting Act sometimes focuses a lot on those who are the 3 big credit bureaus. but there's more and more companies now that are assembling this information and especially collecting it digitally. They're selling it, and it's being used for all sorts of purposes, including employment insurance and so much more. We're trying to make sure we know what is the new business models that we're using. We do know that there's a lot more of them, and many of them may be doing things that are covered by the Fair Credit Reporting Act. So I hope this committee really thinks about privacy, data brokers all together, because what we did, I think, 50 years ago was important, but it has to be modernized for the age of being.
Absolutely. I think there's a definite urgent need for legislation. I think the Fourth Amendment protection of privacy is probably the most abused current portion of the Bill of Rights. Not that there aren't other portions that are under stress. But, you know, you recently noted in remarks at Money 2020 last year that the Bureau will be, quote, exploring safeguards to prevent excessive control or monopolization by a handful of firms. Over the last several years, a consortium of the largest financial institutions in the U.S. has sought to exert governance over data ecosystem and sometimes serving as mandated intermediaries between peer-to-peer consumer transactions, thus decreasing competition and consumer choice in the marketplace. How do you assess this situation as you address the Bureau's goal of providing consumer choice and, frankly, the ability for people to protect their privacy, the privacy of their own financial data?
So what you should expect about how we implement this statute, and I've shared with some of you, we want to propose that there's going to be some restrictions on secondary uses. So if you're moving your data to someone, they should only be using it for the purposes that are permitted. We've got to figure out how to enforce this properly. We also want to think about how to make sure that an intermediary doesn't take the data, send the data, but then use it themselves. So it's not going to be totally easy, but I think we have a framework that will get support, and I expect we'll propose it for comment in October. But the data protection element of this is huge.
Yeah, thank you. And the enforcement mechanism is really the challenge. We've got our own bill, the It's Your Data Act, that recognizes a property right in your individual data. So look forward to continuing to work with you on privacy. I yield.
Time has expired. We'll now recognize the gentleman from Michigan, Ms. Tlaib, for 5 minutes.
Thank you so much. Director, thank you for being here. Your agency, or organization, you're the only financial regulator that is laser focused on consumer protection, correct?
That's right.
You were created, why? Because there was all these bad actors, they were out of control. We had to do something about it because people were calling us. It wasn't just mortgage fraud, it was so many other things. Is that correct?
And it was a global financial crisis caused by that.
That's right. I read somewhere that CFPB enjoys overwhelming bipartisan support outside of Congress. Something like 75% of Republicans actually support the work that the Consumer Financial Protection Bureau supports. I think it's because you did about $17 billion in relief for over 200 million consumers through the Bureau's enforcement and supervisor activities. And that's why I don't think I'm surprised by those statistics. I actually wanted to look it up because I know I've referred constituents to the Bureau and they've been very incredibly helpful, especially because I think you guys actually read those, the small print of things that get sent out to our consumers. Our residents just don't know what their rights are. I want to talk about the credit card fees because ever since you told me what you are doing on that, I've been bragging about it because I think it's so important to show that the federal government's got your back, that there is this agency that we're independently funding that's specifically working on this. I think you all are, the proposed rule on Regulation Z would likely save cardholders billions of dollars each year. I read something around, roughly $12 billion annually?
That's right.
Director Chopra, when I read that, what is it, like some credit card, it's like part of their business plan that 40% of their profit or something crazy, I don't know, you got to correct me, is from late fees. Like they literally have built a profit and like a line that is specifically all about generating profit from late fees. Can you talk about that?
Well, I just think what Congress wanted when passing that law over a decade ago is just some common sense safeguards that the credit card industry can charge interest, can charge fees, make a profit, but when it's designed to build a business on penalties, lenders should want their customers to pay back and pay on time. We don't want a system where people are happy when someone doesn't pay on time, or if yes, they missed it by a day, I've got them. All we're looking for is something balanced and reasonable.
You know, I looked, and it really does impact some of our working poor communities regarding the late fees. They're paying like twice as much than any other cardholders. I also have been incredibly thankful for, and again, the Bureau didn't have to do this, but your report on medical debt literally triggered the credit reporting agency, all the three major ones, to do something. Can you talk, the fact that you all did this study that basically said this is the impact of having medical debt on people's consumer report, and it was pretty drastic. I think I saw something like $88 billion in medical debt are in consumer credit records, which impacts housing, employment, you name it. The credit score and report is used for so many things, including auto insurance rates, as we talked about. Can you talk about that study and what happened? I think days after you all released that study, what happened?
Yeah, shortly after, the three credit reporting conglomerates agreed to really drastically limit what is showing up. They also delayed when it would show up, because often the consumer is just sort of debating and dealing between the insurance company, the provider, the facility. I just think we want to make sure that that credit report is not a place that you can threaten someone to pay something that they don't owe. But we still have to make sure we look at accuracy standards across the board. I also hear there's other types of bills that show up that may not be actually accurate.
Yeah, that's the thing in the report. I read something around over the last decade or so, maybe from 2005 to now, that there has been a 31% increase in inaccuracy of medical debt, because basically people are being misbilled and all this stuff, and this is happening. Do you support prohibiting and banning medical debt on people's credit reports?
I think we're going to be proposing some more safeguards on it. It's interesting, medical debt is ill-defined because it's also medical credit cards. Also, medical debt can show up in other types of debt. So we're trying to work on the specifics.
Yeah, Director, before me, I was shocked to know the VA, our VA sends medical debt of our veterans to credit reporting agencies. Did you know that collection agencies?
Yes, though they have
Generally,
dramatically made some changes.
Time is
I know, but
expired.
it's very, very disturbing. Thank you, I yield.
Next, we'll go to the gentleman from Wisconsin, Mr. Stile, for 5 minutes.
Thank you very much, Mr. Chair. Thank you for being here, Director Chopra. I want to dive right in. As you know, FSOC SIFI designation is a serious authority that carries with it significant regulatory supervisory burdens. That's why Congress and the courts underscored the importance of the analytical rigor and due process as part of the designation decision. In your statement accompanying the announcement that FSOC would change its approach to SIFI designation, you wrote the following, quote, "In 2019, FSOC effectively repealed the ability to designate systemically important non-bank financial institutions by adding an array of dubious process strictures. In your view, do these strictures include cost-benefit analysis?"
Well, let me just say that the guidance is up for comment right now, the changes. Of course, there should be a fair process and a very analytically driven
But what
process.
I'm diving, appreciate that there absolutely should be. Do you believe that you said that it added an array of dubious process strictures? I'm trying to get understanding of what you view as these strictures, and does that include a cost? Do strictures include the cost-benefit analysis?
I wasn't referring to that. I believe what I was referring to in the 2019 guidance, it set up a number of additional hoops.
Understood, but specifically, cost-benefit analysis is inside your dubious process analysis or outside?
I wasn't referring to that when I was referring. I was referring to the stages at which each level of review, and my concerns, I believe, are shared in writing by the Secretary.
Okay, I just want to make sure that the cost-benefit analysis you don't view as dubious, because that cost-benefit analysis, I think, is really an important component of our regulatory oversight. Let me shift gears to a slightly different topic, but when you speak a lot about your term junk fees, There's been a lot of discussion today about that in your efforts to extend CFPB's reach into everyday American lives using what I believe is a very vague term. And still not clear to me what your meaning when you use the term junk fee. Is based on previous explanations. You argue our government sometimes charges its own citizens junk fees. And I'm sometimes concerned here that the CFPB's proposed restrictions on credit card late fees, whether or not that is your term of a junk fee. Nobody likes paying late fees, and you don't want people to get into financial distress. But I'm also trying to look at what the trade-offs are here in your cap on fees. I know one of your proposals has an $8 caps on fees. And so I think the question is, you acknowledge there's potential significant trade-offs associated with setting a cap on late fees.
So first, to be clear, the $8 proposal is not a cap on late fees.
Okay.
That is the immunity provision. So companies who charge $8 or less do not have to worry.
So you're creating a safe harbor, $8 or less under that proposal.
Exactly. So
Okay.
what we inherit.
So it's not a cap, but you're saying, hey, if you're under 8, you're safe harbor. You're over 8, we may or may not come after
No,
you.
that's actually not how it is. If you're not on the 8, we explain what you should be prepared to calculate so you can get certainty. The Congress prohibited unreasonable and disproportionate penalty fees. We're trying to provide clarity, and it was clear the rule we inherited was way overdue for review. There was so much technological progress and changes in the credit card market that need to be reflected.
Understood. I go back to my original question on this topic. Do you believe there's potential trade-offs in setting a cap?
Yeah, so what I think will happen is that we'll start seeing things, rather than a business model built on penalties, they'll compete just like other banks and small banks do who offer credit cards, which is really upfront on annual fee, on interest rates, and others. I think the competitive process will work better. Consumers are smart, more likely to switch, and will be healthier overall. But we're looking.
So you don't think that by setting a cap, just as we play this out analytically, right, pure economic analysis on this, you don't think that you're going to lead to more expensive credit?
It depends on the competitive factors. So you will see consumers switch based on that. It really depends on the econometric model, but we are looking at all the comments, and we'll look at it very carefully and analyze it before finalizing.
In my final 15 seconds, and I've asked you this before, do you believe CFPB possesses regulatory oversight authority over insurance products or insurance companies?
We do not regulate the business of insurance.
Thank you very much. Mr. Chair, I yield back.
Gentleman's time expires. We'll now go to the gentleman from North Carolina, Mr. Nickel.
Thanks so much, Director Chopra, for being here. I know with these five minutes for questions, it's tough to kind of get everything out in the time that you have. I'm going to say a few remarks, but I want to just give you a beat to think about it after I say a few things. If you want to jump in and supplement some of the comments you've made on some other things, I'm happy to give you some time. But I want to just start off by saying that I was proud to sign on to the amicus brief led by Ranking Member Waters supporting this CFPB at the Supreme Court. I know you've been under attack here today, so I want to just thank you for all of the work you're doing to protect consumers. Do you want to take any time to talk about, to get a little more time on some of the...
Yeah, I know we've talked about the work we have been doing, but I also want to make sure we're thinking about the future too. We are seeing very big players, especially tech companies, come in. We're seeing the future of money look different. Digital payments, artificial intelligence. It's so important that we think about tomorrow and make sure that we don't have problems in the future that we can address today.
Thanks so much. So North Carolina's 13th congressional district, I represent 49,000 veterans in my district, and I want to thank you again for the work that the CFPB is doing to protect service members and veterans. I think it's our duty to support and care for the men and women who have served our country. We owe them a debt of gratitude, and we have to ensure that they have access to the resources and support they need to lead fulfilling and healthy lives after their service. In June 2022, the CFPB issued a report highlighting complaints by service members and veterans about problems with coercive credit reporting and false medical bill collections. I'm very concerned that veterans and service members that I represent alike, just like anyone, have a tough time navigating the credit reporting system. If a member of the military has been injured or hospitalized while in service, I don't think it's right for a medical bill to affect their creditworthiness. What trends did the CFPB observe in its report, and what type of relief or remedies would you recommend to support veterans?
So credit reporting, and let me just share, we do see differences between active duty service members and their families, Guard and Reserve versus veterans. Each has unique issues. I would say with active duty, the implications for problems on their credit report are very real. It can even harm their career. Many of them are subject to PCS orders, have to move frequently. That makes it really challenging to make sure that they don't suffer problems when they need to move or sell their home. With veterans, VA mortgages and other VA benefits, we always want to make sure don't become a haven for abusing people. We've done a lot of work on the Service Member Civil Relief Act, which has a 6% cap on pre-service obligations. We found Guard and Reserve families aren't always taking advantage of it and may not be. Financial institutions, we want them to work more to honor those rights.
Thanks. I'm also very concerned about the rise in abusive debt collection practices, including those that target low-income seniors, such as zombie mortgage debts. Zombie mortgages are those that consumers thought were forgiven or satisfied long ago but still exist. I was pleased to see that the CFPB held a field hearing on this issue in April. Can you tell us what you learned at the hearing and more about the CFPB's work in this area to protect homeowners targeted by these unfair collection practices?
Well, we heard from a lot of experts, but including one homeowner who testified and talked about how they got a mortgage, one of those 80-20 piggyback mortgages before the financial crisis. She got it modified, and the second mortgage was satisfied, but then fast forward, no communication, I believe, for over a decade, and now is getting threatened with foreclosure. I think these second mortgages, which many people believe were satisfied, are now coming back, and we have tried and issued some guidance to make very clear when there is time-barred debt, there are certain responsibilities. We do not want to see this unlawful debt collection behavior, especially targeting those who their wealth is mostly their home equity.
Thanks so much, and I yield back.
The gentleman yields back. The gentleman from Wisconsin, Mr. Fitzgerald, is now recognized for 5 minutes.
Director, thanks for being here today. I wanted to just go on two different topics. The first being something that's already been talked about ad nauseum, but the credit card late fees. Specifically because, I have corporations in the district. Kohl's department store is probably the best example. And I'm worried that the rule could have a negative impact because I don't know if the differentiation is there between bank cards and what you might see with retail, and I'm wondering if you guys looked at it from that perspective.
It's a great question. So store credit cards, you're right, the market is a little bit different than the generally available bank cards. They do work with a financial institution to issue it, to provide all the statements and the underwriting. A department store like Kohl's will probably work with them. There is different demographic, different loan characteristics of it. We certainly tried to look hard at those differences when shaping the rule. At the end of the day, though, a reasonable late fee and making sure that there's incentives for consumers to pay, I think will be good. I will also tell you, for those retailers, they incur some real damage sometimes when their customers are not being treated fairly by the financial institution partner. So I'm hoping that the retailers themselves can also see some benefits from this.
Okay, thank you for that. And then I'm not sure if other members had touched on this, but I think for some members of the committee, maybe they have the answers they want, but regarding the SVB failure, kind of that whole weekend that happened, we're 100 days out now. The FDIC, the Fed, Treasury, I don't think we got the answers we need from them. So my question would be, what was your role, maybe, was ad hoc and kind of developing as that weekend played on?
Well, certainly as a board member, there are 5 members of the board that have to steward the Deposit Insurance Fund and take those emergency actions. We were often meeting late and taking votes in the middle of the night. It was a very fast-moving situation. These entities I'm all familiar with because they're also large banks subject to the CFPB's oversight.
Right.
We had real issues, and the decision to insure uninsured depositors on an emergency basis was a very, very serious one. We do think it created some stability in the system, but we need to make sure that we are ready for future runs like this and that the system is resilient and appropriately capitalized.
So specifically, what's your memory about what happened on March 12th at that FSOC meeting? What happened during that meeting?
So there was FSOC, was that on a Sunday maybe? We were all working round the clock. We were regularly in touch, the FDIC, the Fed, with the Treasury, because those emergency powers require the consent of the Secretary. So anytime there's major movement like this, obviously there was the worries about Credit Suisse as well. We did exchange information about the latest intel that we had. I don't know the specifics of it, but certainly we like to share information.
Do you feel like decisions were made and that there was already movement on trying to sell or save the banks at that point by the time the FSOC meeting happened in mid-March?
I don't remember when the FSOC meeting was, but certainly the failure of Silicon Valley Bank, it happened at around 11 a.m. on Friday. It didn't even make it to the end of the day. Signature Bank barely made it through and ended up failing on Sunday. So it's not like a normal bank failure where there was clear awareness well in advance and the entities can prepare for the resolution in the same fashion and find buyers. The First Republic resolution was quite different. The closure and sale happened over the same weekend, but the speed in which SVB occurred, it was lightning fast. And so, we did not get, I believe, a valid bid submitted that weekend. But over time, after the emergency actions, we were able to.
Okay, so let me ask you a huge question. It would be difficult to answer in a half a minute, but what is your opinion now of where we're at, and not just related just to banks, but all financial institutions, and is the market stable, and are regional banks in a good position as well?
Well, I think what we've seen is that deposit outflows have really stabilized. We're not seeing broad movement. We did see a big hunk of deposits move to money
The
market.
gentleman's time's expired.
Thank you.
I'm happy to talk to you further.
Thank you.
The gentleman from New Jersey, Mr. Gottheimer, is now recognized for 5 minutes.
Thank you, Director. Thank you, Chairwoman. Director, I previously shared my concern that the CFPB's consumer complaint database may be a breeding ground for consumer misinformation, where competing small businesses can file false complaints about competitors. In 2022 alone, the CFPB reported receiving nearly 1.3 million complaints. I understand that companies have an opportunity to respond to complaints that are filed with the database, but is there a vetting process in place at the Bureau to weed out false complaints submitted to the website so that these small businesses aren't playing defense for those competitors who are trying to get them?
Yes.
Can you talk a little bit more about that?
Sure. So you actually raised this in a previous hearing, and I went back to the staff to make sure I fully understood. When a company is enrolled in the complaint database, when a complaint is received, they are actually able to determine, is this even our customer or not? So that is a key check to make sure that there is not any kind of false identification. In some cases, more information is needed. After you raised it, I also looked if there were any other indicia of this happening, and we did not see any, but we're always looking to make sure that is processed.
So before it's posted, they can stop it from being posted?
So it's only posted under certain circumstances. So, and I believe one of the circumstances is that, is it actually the customer?
Got it. So before it's even posted, you go back to the business and say, is this a customer of yours?
Actually, the way it works is the consumer files it, it almost immediately goes to the entity enrolled in our portal. They are able to respond, and it doesn't show up in the database until well after. So there is a bunch of checks to limit that.
Got it. So if it's a competitor, they can, and not a customer, they can stop it from being posted.
Yeah, I mean, I don't think it could even show up because it's not a customer. So.
Okay, that's good to hear. And I'll follow
will
up with-
verify, but that's my
I'll like to follow up with you on that. That'd be great. The CFPB's Office of Service Member Affairs helps military families overcome unique financial challenges, ensure they make the best financial decisions. Late last year, the CFPB reported that members of the Reserve and National Guard are paying an extra $9 million in interest every year because they're not provided their rights under the Service Members Civil Relief Act to request interest rate reductions on loans during active duty. Since that report was published in December of last year, can you tell me a little bit of what steps you've taken to inform service members and financial institutions of the benefits provided under the SCRA?
So we did share that report with the financial institutions, and it is tricky for many people may not know that Guard and Reserve, when activated, they get the benefits afforded to active duty. So there is a database that the Department of Defense makes available. We have shared information about how financial institutions can use that. In some cases, many of them are automatically giving those benefits, and I think that's a huge benefit, especially for a consumer, for an individual who's been activated. They want to minimize the amount of bureaucracy they have to go through.
Thank you. The Supreme Court is expected to rule on the constitutionality, as you know, of the Bureau's funding mechanisms in the coming months. I believe the Bureau plays an important role in protecting consumers from illegal activities in the marketplace, and I think it's vital that we be prepared for all potential decisions of the court. If the Supreme Court rules against the Bureau, what will the impact be for consumers, and do you think it's important that Congress start to act now to be prepared to promptly address a potentially unfavorable outcome?
Well, there would certainly be, and we've heard from many corners of the industry as well, is that if there is a decision that throws uncertainty into, many industry players rely on the certainty afforded by especially our mortgage rules. We do not want to see disruption in our mortgage markets, especially in the environment that we're in. So I'm happy to talk to you further about it, but the Solicitor General has filed a brief with the Supreme Court and laid out the argument about why it would.
Do you think we need to start taking congressional action to be prepared in case the mechanisms change?
I will take that back. I'm happy to take a question for the record, but really we're focused on the litigation. And
Okay. Yeah, no, I'd like that because I don't want to find that suddenly the court rules and then we have to scramble. We don't exactly always move very fast here. So I've heard stories about consumer financial services offered by unregulated scammers, some of whom operate online, offshore, and beyond the reach of state and federal regulators. Does the Bureau place a priority on detecting and deterring unregulated financial service operators? And can you give me some examples of the steps you're taking in the last few seconds here?
Sure. So one of the key things is outside of the insured bank and credit union system, it is our job to protect against those entities that violate the law. We're devoting a lot of energy using authorities Congress has given us to supervise some of them. When it comes to offshore, that is a very challenging problem, especially using digital technology.
The gentleman's time's expired. The gentleman from New York, Mr. Garbarino, is now recognized for 5 minutes.
Thank you. Thank you, Madam Chair. Thanks, Director, for coming. I just want to get some clarification. I know you talked a little bit about already about the small business data collection rule. I've heard from the private sector that the CFPB's small business lending data collection rule would impose 81 overburdensome and complex requirements, 81 new data fields for each loan by some counts. I think you said 15 to 20 is possible.
Yeah, I think there's a little bit of apples and oranges between data points. So there's about, I believe there's about 20 data points. The fields is a little bit of a different issue. It's kind of how they input it.
So could 81 be correct? 81 data fields?
Yes, it's in the way in which it's sent, but it's not the points that's in the statute.
So this is 81 new data fields for each new loan, along with a time frame, 18 months for some companies, 36 months for others. I've heard from the industry that 18 months to set up a collection data, to protect it, get everything ready with its lenders. 18 months is going to be too short of a time period, and I don't see why it's 18 months when other companies are getting 36 months. What are you concerned that the 18 months could set some of these lenders up for failure, and why not just do everybody for 36 months?
Well, the reason why is I think we wanted to look at how smaller banks, local banks, others, they have different issues that they have to deal with when implementing some of this. So we focus the 18 months on the largest lenders who have very large books of this and who often are big institutions themselves. So that's part of the reason we had this phased in implementation.
I understand the reasoning for doing it for the smaller banks, but I'm hearing from the smaller lenders, but I'm hearing from the bigger lenders that 18 months is still not enough time to get this done. Is the CFPB are you considering delaying the 18-month time frame?
Not at this point. We are working to make sure that the system is well prepared for it. I will say that many of these are quite large entities and have told us they have put in a lot of preparation, but I'm happy to hear more from those about any challenges. We've set up a group that is working with them on implementation. And again, the reason we phase it in, there will be learnings from the first phase that will help us make sure that when the much larger group reports, it has less kinks.
I understand. And I know you've also talked, bless you, by the way. I know there's been talk already about the data breach. What is CFPB doing to protect from future data breaches?
Well, insider threats are something that we're going to be putting a lot of effort in. We're also putting technological solutions in place. This was a very serious incident. We want to make sure not just our systems are safeguarded from being penetrated by outsiders, but that even insiders have limited access and are not, having to transfer things outside of the systems that are most secure. We're working with the established guidance on making sure that we mitigate and take steps. There's a lot of changes that were already in process, but certainly it's a serious.
How many cybersecurity employees, or how many employees do you have that are focused specifically on cybersecurity?
It's pretty substantial. I don't have the exact number, but within our technology and innovation group, not only do we have chief privacy officer, we have information security professionals, we also get outside support, outside auditors work with our IG as well.
And then one last question. This is a major cyber incident. When a major cyber incident occurs in a federal agency, they're required to notify CISA. Do you know if and when CFPB notified CISA about this breach?
We certainly notified, and I believe we notified DHS and CISA. I would have to look at the timeline, but
you did notify them.
We notified everyone in the OMB guidance, and I believe they're listed explicitly.
Okay. Director Chopra, unfortunately, the CFPB has disbanded the Office of Innovation and offers very few collaborative avenues for innovative companies to work with the CFPB to gain regulatory clarity on the myriad of announcements coming from the Bureau. A huge issue in my district is home affordability. The average cost to originate a residential mortgage has doubled from $5,000 to over $10,000 the same period of time in the last 10 years. What exactly is the Bureau doing to try to lower the cost of home ownership?
Well, there's so much we're doing. We've actually put out and gotten information about how we can streamline.
The gentleman's time has expired. Sorry. Now I would like to recognize gentlewoman from Colorado, Ms. Patterson, for 5 minutes.
Thank you, Madam Chairwoman, and thank you, Director, for being with us today. This is a difficult committee. You've done a great job. I want to thank you for the work that you do every day advocating on behalf of our constituents and making sure that some of the most vulnerable are not being taken advantage of and that they have a voice and a backstop. I really enjoyed meeting with you in my office to talk about the specific services that you're able to provide. And I think so many of these tools, many people don't even know that they exist. They don't know what's available. And so I want to just give you some time to kind of highlight the programs and the opportunities that constituents have, just to, what we should tell our constituents to make sure that they know the services that you provide.
Yeah, I think the focus of where we can provide so much individual help is our consumer complaint line. It was established in the law. We're doing, as it was said, 10,000 a week, and we hope that even if you don't know the name of any individual agency, that you know there's a place you can go where if you're having trouble with a consumer financial product or service, you can file a complaint and it won't go in a black hole. It will actually, and in most cases, I believe, transferred to the institution. And it's such a way that we've been able to get people help, but also for the financial institutions to know the challenges that are being experienced so that they can make tweaks to their processes and mitigate harm going down. I urge you all to get the word out about our complaint line.
We plan on doing that with some of our constituent outreach, so thank you for highlighting that. One of the concerns that we've heard that has come up with limiting the junk fees, and I want to thank you for taking this on. While I recognize you don't have the authority to highlight these practices, you were able to set a limit. And this is something that all of us have experienced, where we think that we're going to buy something, and on the back end, we see all of these additional fees that we are unaware of. This especially hurts people who are lower income, are elderly, and so thank you for taking this on. One of the concerns that has been raised, though, is that when we're limiting fees like this, that there won't be the financial options for people with lower incomes, where they're the unbanked areas, I guess you could say. What can you address in this area on what you're doing to make sure that that's not the case?
Well, we have seen a lot of good movement and competition to offer lower no-fee products with no surprises to really anybody. Sometimes, we don't necessarily need to go through a bunch of hoops. It really is one of the benefits of competition here, and we see so many institutions offering these products now. I believe at thousands, maybe it's hundreds of banks, these no-fee accounts, and it's a big benefit to those who live paycheck to paycheck.
That's great. That's another thing that we can highlight for our constituents. I know that there were a lot of questions asked of you with limited time to respond. I want to know if you have any other pieces that you'd like to address on some of the concerns that have been raised and questions that my colleagues have had.
I think there was a question I didn't get to fully answer about the Financial Stability Oversight Council. I think there was elements of the guidance from 2019 that were not related to the law at all. It indicated that there were certain procedural hurdles that I think were not appropriate, but of course, we have to carefully consider what Congress wanted, and obviously, we do not want there being big non-bank institutions who cause a collective calamity for the rest of the market. I also will say, again, there's been a lot of talk about, our motives. Our motives are to carry out and fulfill the objectives you have specified in the law, and I take great pride in the work of all of the public servants at the CFPB who have helped so many people.
Thank you for recognizing that. I also want to thank your team for doing their work. I know that it's a difficult job. Couldn't be more obvious with the hearing today. So thank you for what you're doing every day. And with that, I'll yield back.
Thank you. The lady yields back, and I now recognize myself for 5 minutes. Director Chopra, I'm disappointed that your written testimony did not mention financial literacy or education as one of your priorities. Consumer education, as one of 6 primary functions of the Bureau, is essential for consumer protection, and I serve as a co-chair of the Financial Literacy and Wealth Creation Caucus. And so I would like to urge you to make use of the public-private partnerships to enhance financial literacy. According to the Civil Penalties Fund's annual report published in November 2022, the total unallocated balance was more than $481 million. And recent reinforcement actions may have increased the fund's unallocated balance to exceed $2 billion. So how come you haven't used the fund for its intended purpose to enhance financial literacy since you took office as director of CFPB?
Well, let me just say that financial education and literacy is a real cornerstone of what we're doing. In the annual report, that's part of our testimony.
I'm glad we agree. I'm glad we agree.
So on civil penalty fund, the civil penalty fund has 2 purposes: victim redress and financial education funds, financial literacy programs. We actually expend resources on financial literacy through our general funds, which cannot be used for victim redress.
Sure.
But we also want to make sure that those funds expended are smart. And that they're not wasteful, that they're effective.
Well, I'm glad to hear that. And I also want to echo the urgency of my colleague across the aisle, Mr. Scott, to use the fund for its intended purposes. And I ask that you, rather than focusing on blog posts and press releases, I would remind you that you have other tools in your toolbox, like that fund, to prevent fraud and scams. So please, let's use more of them. Now, are you concerned about the amount of credit card debt held by Americans?
I don't tend to think about the overall amount, but it certainly has accelerated. I'm more worried about delinquency, costs, and having a competitive cost of credit.
So I would like to address that issue. In the credit card fee proposal, you cite the research that was co-authored by 2 former Bureau economists that use the Bureau's own Card Act data. That study states that when the credit card late fee decreases, it incentivizes higher usage and greater likelihood of paying late. Is that right?
I don't know the specific study you're referring to, but if you're saying that a late fee may have some impact.
Well, that's a study that is based on a peer-reviewed academic publication.
Okay, and I apologize. I don't have all the facts from that individual study cited, but of course, we think a lot about...
Despite that, the Bureau disregarded that research, and instead, you conducted your own analysis, but that analysis wasn't peer-reviewed or published in a journal. That's our understanding.
Well, we certainly look at a lot of data sources, studies on consumer credit. I know you're mentioning one. I'm happy to take questions for the record on that specific one.
Well, your credit card fee proposal, that's not going to reduce prices for consumers. Instead, the reduction in fees will lead to an increase in borrowing costs and potentially higher debt for families and individuals. So the CFPB also acknowledged in the credit card fee proposal that customers who never pay fees late, which is about 74% of all Americans with credit cards, will not benefit from the reduced fees and could face higher maintenance fees, lower rewards, or higher interest-paying accounts. So I just wanted to point that out to you, and I want to move on to the next matter. And I agree with you. The open banking has the potential of unleashing innovation and more options for consumers, but CFPB recently issued a request for information soliciting public feedback about data broker market. The request uses a definition of data broker that essentially covers every consumer-facing businesses in existence. Firms that collect, aggregate, sell, resell, license, or otherwise share consumers' personal information with other parties. So do you believe that small businesses in Southern California, like hair salons, gyms, flower shops, should be subject to Fair Credit Reporting Agency since they collect personal information from consumers?
No, I think the purpose is it's about companies that are assembling dossiers just like other background screening companies or as other tech companies and others. So we are actually soliciting input. That was not a proposed rule. We're trying to make sure we get the right type of input.
Sorry, your time has expired. Before I ask the next person to ask a question, I would like to enter into the record the Washington Post fact checker that was dated June 12, 2023, without objection. Okay. And now I'd like to recognize the gentleman from Missouri, Mr. Cleaver, for 5 minutes.
Thank you, Madam Chair. Thank you for being here, Mr. Director, and I personally appreciate your availability to all of us. In my real life, I'm a United Methodist pastor, and I deal with people mainly when they are in trouble. I mean, rarely does someone come by and say, just wanted to come by and tell you the world is great and everything is really, really nice in my life. And one of the things that people have as a major problem more than anything else are their finances. And there are those who have sought to take advantage of people In fact, they are generally targeted by the so-called credit repair companies, organizations, which they're so fraudulent that they make Bernie Madoff seem like the Dalai Lama. And they are specializing in making people who are hurting hurt more. They are inverted ATM machines. And we are being victimized. When I say we, Americans are being victimized by other Americans who are running these fraudulent organizations, promising to fix bad credit, when in reality they're going to fix you for coming in there. And so I'm thinking right now that something more needs to be done. I'm not sure exactly what we can do to stop the financially distressed consumers from being hurt worse, but many of those consumers, as I mentioned earlier, are targeted, and they're trying to get their financial lives on track. What is the Bureau doing, and are you getting a large number of complaints about these credit repair companies who are, from my perspective, almost committing thievery?
I don't have the exact numbers, but certainly people who are trying to repair their credit, many of them have been targeted by those who are fraudsters or scammers. There's been a number of enforcement actions. I definitely welcome any input on how we can more holistically deal with this, because sometimes going after one by one well after they've run off with the money won't fix the problem. I think accuracy in credit reports and figuring out how people can rebuild is obviously important, but we want there to be honesty and compliance with the law.
Yeah, I don't think it's something that you or your agency can repair by alone. But there needs to be something that we can do, with CFPB and local organizations, maybe ministers, because they hear these on the radio. They're not so much more. They're not much on TV anymore. They're advertising on radio, and I'm hoping that we can, maybe work together on something. But I don't want the Bureau sued. But I'm just wondering, can we do public service announcements? Can the agency talking about, the mortgage thievery that's going on, and of course these credit repair organizations? Can the agency get involved in trying to get public?
Yeah. Actually, even the financial industry has helped with warning about some of these things. We try our best to help people understand and give them objective information. What should you do when you have a potential issue like this? It can be hard to get out the word sometimes because people can be micro-targeted very specifically, but there's certainly more we need to do to make sure people are protected from this.
Thank you. I may have some ideas that I'll share with you later. Thank you very much. I yield back, Madam Speaker.
The gentleman yields back. We'll now take a 5-minute recess to allow the witness a brief break. The committee stands in recess. We will come to order. The chair now recognizes the gentleman from Florida, Mr. Donalds, for 5 minutes.
Thank you, Madam Chair. Director Chopra, thanks for coming in. You've said previously that markets work best when the rules are simple, easy to understand, and easy to enforce. Would you agree that markets work best when rules are actually relevant to today's marketplace?
Yes.
So let me ask you this. I want to go into a couple of things about payment portions of the CFPB's small dollar rule. I know that this is at the center of litigation, and that none of us know for sure where it will end up. Section 1022 of Dodd-Frank requires the CFPB to conduct a 5-year assessment of each significant rule, or order adopted by the Bureau under federal consumer law. This assessment is supposed to address the effectiveness of the rule in meeting the purposes of the objectives of the Bureau under Dodd-Frank, as well as specific goals stated by the Bureau. The public would also be allowed to comment on the recommendations for modifying, expanding, or eliminating a rule. If this rule had gone into effect and had not been delayed by all the legal challenges, I believe the Bureau would have had to complete such assessments of this rule this year. When you look at the data, the alternative credit marketplace has shifted dramatically over the past 5 years. So if the court were ultimately to decide with the Bureau on the legality in question, wouldn't it be prudent to evaluate whether the rule is relevant in today's marketplace and is really going to meet the objectives that the Bureau intended?
Yeah, one of the things I've done is I've really opened up and increased the analytical rigor of justice. So many times they create rules and it's not future-proofed. So I'm always open to collecting more information to see if there are any adjustments that need to be made. I don't know the specific provisions you're necessarily referring to that may have been subjected to technological change. There are certainly many rules that were transferred to the CFPB from the Fed and the FTC that were not future-proofed and were way too complex, and certainly simplicity is a lodestar. We can't always get there, but we want to get there.
Would you acknowledge that it's prudent for the CFPB to actually review periodically all of its existing rulemaking and decide whether it's even necessary in today's environment? Case in point, obviously we know that banking is moving by leaps and bounds, becoming far more technical for a myriad of reasons, regulation being one of them. Wouldn't it be prudent for CFPB to actually review these things periodically, make adjustments, or cancel previous rules altogether?
Well, that's what you're seeing some of me doing during my tenure. We are reviewing some older ones, putting it out for public comment. Even the one on credit cards is really a rule review at its core to make sure it's based in reality. I think you're raising this point, though, on digital that's really important. And we need to make sure that we're not just thinking about the human world, but how will it work in the metaverse? How will it work in other contexts? Because otherwise it creates problems if people don't.
Well, I will say, and I'm glad you raised that for two reasons. One, with the relook at the credit card rule. You've said, and I think my colleague from California brought it up in earlier questioning about the changing in late fees from $30 to $8. You're on the record saying that by our estimate, 75% of late fees, $9 billion, have no purpose beyond putting the credit card companies, beyond padding the credit card companies' profits. Do you stand by that statement?
Yes, and that's based on our estimate, and that's based on a point in time where late fees might have been lower than they otherwise would have been. Congress was clear. Those penalties are supposed to be reasonable and proportional. And we do not want loopholes from rules being used to evade the law.
Director Chopra, do you think that it is prudent that the CFPB has the ability to unilaterally decide what are going to be late fees on consumer financial products, notwithstanding the ability of cost shifting as a result of capping fees?
Well, we don't have unilateral ability. Congress sets out the framework in law. And we're
Director
trying
Chopra, I would argue that the CFPB is taking broad use of their powers, which, by the way, to be clear, I do believe wholeheartedly your agency is unconstitutional. I think it was unconstitutional when it was created in Dodd-Frank. I think you were given broad latitudes under, frankly, partisan government at the time to not even really be accountable to the people's branch of government, the legislative body. And so I do have issues with CFPB, but let's be clear, you guys have taken broad latitude on many issues over time.
And it is
throughout your
always
existence.
consistent with the laws that Congress passes.
And I would argue that those
Gentleman's
laws have never
time's
been subject
expired.
to Congress's ability to oversee you. I yield.
Gentleman, time's expired. The gentleman from New York, Mr. Lawler, is now recognized for 5 minutes.
Thank you, Madam Chair. Director Chopra, thanks for being here. A huge issue in this hearing has been the egregious lack of accountability of the CFPB and the lack of clarity and poor process that has been followed in your rulemaking and enforcement processes. What is your understanding of the Administrative Procedure Act?
Well, the Administrative Procedure Act has a lot of different provisions. It touches everything from citizens' ability to petition their government. It also covers
Yes, let's not waste
No, I think you're
time.
talking about
What is your understanding of the Administrative Procedure Act with respect to your job duties and how you rulemaking?
Absolutely. So it requires that the decisions not be arbitrary and capricious. For rulemakings, legislative rulemakings, it requires a notice and comment period. It requires a response, a consideration of those comments, a proposed rule, and a final rule, and all of those rules are subject to court review under that standard.
And how should that rulemaking process be followed? How should the notice and comment period operate?
Well, based on the other relevant statutes that apply, there is a period for which you publish the notice in the Federal Register. There's a comment period, 30, 60, whatever have you. After that time, comments need to be considered. In any final rule, we analyze the comments, and actually substantial parts of the final rule discuss those and explain where there were changes made from the proposal to the final. There's other parts of the APA as well, but again, we're subject to quite a bit of review on that.
And where in the APA does it talk about being able to rule-make through blog posts and speeches?
It doesn't, and the concept of rulemaking through blog posts, I don't know where that term came from, but when we issue a blog post, we got feedback from various industry associations. They wanted more information about what the CFPB was doing, to have more notice, to understand specifics about programs. So
right, but you seemingly are using these blog posts to issue more information, thereby issuing more rules, correct?
No, those aren't rules. I mean, rules have to go through, as you're suggesting, the Administrative Procedure Act. There's not...
Right, so then why are you using blog posts and or giving speeches talking about what the industry should be doing if you're not following the exact rulemaking process?
So blog posts is something that we put on our website for information for consumers and the public. Those are not rules. Statutes and regulations codified in the Code of Federal Regulations is what creates obligations. Again, we received input from entities like the Consumer Bankers Association, who asked us to continue what my predecessor, appointed by President Trump, on issuing advisory opinions, informal guidance. That's what we've continued. So I'm getting two different conflicting messages about we're trying to be transparent and open. Those blog posts for the consumers and the public are not rules and not creating new obligations.
Okay, so that we're all clear, your blog posts do not have the weight of law and nobody should follow them? Is that what you're saying?
No one has suggested, I think, that blog posts are rules. So again, we have tried to provide guidance, other of advisory opinions, very consistent with my predecessor, and also what almost every other agency does. There has been a request for more of it over the years so that you don't need lawyers as much. You have more plain language support. This seems like something that is a good government.
Okay, so going forward, we all agree you'll be using the Administrative Procedure Act for rulemaking.
Well,
you won't be using blog posts or speeches to put any obligations on anybody within the industry going.
There has been no blog post that created a new obligation on the industry.
Good. Okay, great. We're in agreement. Do you agree that you will commit to publicly releasing all of the facts and data that are used to support your decisions during the rulemaking and enforcement process? So far, there's been numerous requests by this committee.
The gentleman's time has expired.
Thank you.
The gentleman from Nebraska, Mr. Flood, is now recognized for 5 minutes.
Thank you, Madam Chair. Director Chopra, thanks for your testimony today. I want to talk about student loan repayment. In March, Nelnet, the largest federal student loan servicer, submitted SEC filings disclosing a significant modification to its federal contract with the Office of Federal Student Aid, or FSA, showing that the Biden administration has slashed its funding for student loan servicing operations as 40+ million borrowers returned to repayment on September 1. Nelnet disclosed these layoffs due to the rate cut. Across the board, federal student loan servicers are entering return to payment significantly understaffed. That's a concern. The contract modification also shows FSA's acknowledgement that it is paying less for student loan servicing as borrowers return to repayment. At this time, I'd like to submit both of Nelnet's 8K filings related to the contract modification for the hearing record. They are dated March 22nd, 2023 and March 27th, 2023.
Without objection.
Director Chopra, can you commit to me here today that your agency will not enforce against federal student loan servicers for providing service levels commensurate to their compensation as articulated in their current contracts?
So they're only responsible with respect to the CFPB for federal consumer financial protection laws. So they have to adhere to those laws based on, and if they enter into contracts with third parties, with governments, I do take
With all due respect, Mr. Chopra, they're entering into a contract with the Biden administration's FSA office. So I think I maybe interrupted at a point where you were going to acknowledge.
Yeah, I was just going to say that there's no question that the resources of the Office of Federal Student Aid to hire contractors, I understand that it's a very dire situation and that if they can't adequately get the right support, the return to repayment will not be successful. But I just want to be transparent and open with you. We can't consider their contract negotiations when it comes to compliance with the law. They are a private party who is free to enter into contracts as they deem appropriate. So, but I hear your point, though.
I think I'm really sounding an alarm here as 40 million borrowers come back into repayment. This is a bad situation if the FSA does not provide the resources, and this Congress does not provide the resources to make that happen. And would you agree with me, it is going to be the most difficult for those reentering repayment that need an extra level of support and service to ensure that they don't have an adverse effect on their credit reports so that they understand how to make those payments. Do you share that concern?
Yeah, I agree with you. We need to make sure that, and in some ways, if there's not adequate support, the problems we could occur could be very, very big.
You and I agree. The decisions by this administration to politicize the student loan program through extended, unnecessary pauses in pursuit of illegal loan forgiveness has harmed borrowers, has resulted in a confluence of events that all but guarantees repayment to be exceedingly difficult, and no one but this administration is to blame when and if return to repayment is a disaster. I have more than 3,000 student loan servicer employees in my district. When the FSA decides to cut rates, they are jeopardizing jobs in my district, but as we have discussed here, they're cutting down on the service that are provided to people that are going to work, that got an education, that have to pay back these loans, and I don't want them to miss the opportunity to figure out how to get that money back to the creditor and make sure they don't suffer any ill effects on their credit reports and that we get them back on the road to repayment in a good way.
And an appropriate level of service is probably good for everybody. It increases the likelihood of longer repayment or appropriate repayment, and as you mentioned, avoids the consequences of default that can be very significant for an individual and the system.
Absolutely. And it would be a disaster if the federal government refuses to pay adequate rates to servicers on one hand and then starts going after them for service quality on the other. And I think that's the point that I really want to make. And with that, I yield back.
The gentleman yields back. The gentleman from Iowa, Mr. Nunn, is now recognized for 5 minutes.
Thank you, Madam Chair. Thank you, Ranking Member. Thank you, Director Chopra, for being with us today. we're almost at the end of the testimony. I know this has been a marathon, and I appreciate you being forthright with us and having this conversation. I'm going to ask you today some questions that are coming up from my small businesses, a lot of my local bankers. These are folks from the Midwest and Iowa who are trying to do the best they can. They've been very successful in the past, but there's been some challenges coming from an agency which, in their words, they feel is opaque, potentially increasingly partisan, and analytically weak. Several of these same colleagues today on both sides have brought up the funding structure. And it's a lack of oversight in terms that not having an executive board or an independent inspector general that they find concerning. I'm going to leave it to the Supreme Court, and it's how they qualify judges to determine the future on that front, but I would like to talk on some of the tactical issues that are facing your organization right now. I want to start by following up on what Representative Pete Sessions highlighted here on the issue of a cybersecurity incident that occurred under your watch. Your agency had a major breach of personal information just a few months ago. I want to share, as a guy who has worked national counterintelligence as director of cybersecurity, these issues have a huge impact on those people who are directly impacted. So where we are able, I'd like to begin by, when did the CFPB first find out about a data breach?
So the exact timeline, I don't want to get any of the dates wrong, but when we identified a potential email that was sent to a personal email account that included confidential information, we brought together our response team to investigate it.
Approximately when was that?
I want to say that was, I don't want to get the dates wrong, but late February.
So in February. When were you able to inform Congress about that?
I don't have the exact date, but we...
Approximately.
I don't even want to give an approximation. I want to say it was about a month,
Okay.
maybe a little less. But
for the individuals,
but that was from the time of the suspicious email.
Right.
So obviously, we had to look to see if there was any other.
Absolutely, a data forensic was required. I fully agree with you on that. As an independent organization, though, I want to make sure that Congress is getting alerted to these things happening. Specifically, how many individuals were targeted?
Targeted?
Yeah, in the data breach.
You mean how many individuals' information was?
No, first I want to know how many people were targeted. Was this solely focused on one individual, or was there a mass approach?
I see.
Yeah.
So the issue with the unauthorized transfer was with this one employee who's now a former employee.
Copy. So one point of entry that we're aware of. How many individuals had their information hemorrhaged as a result of this breach?
So what we did is we looked at the unauthorized transfer of emails, and we looked at the specific documents or information that went to their personal email.
Director, was it over 100,000?
Yes, it was approximately 250,000.
Okay.
So even
Quarter of
though,
a million. How many consumers and institutions were impacted by this?
I don't have the exact number of institutions.
Do you know how many Social Security numbers were compromised?
It could be zero, but the 250,000.
Or it could be all of them.
No. The 250,000 did not include any Social Security number, things that might create
Dates of birth?
identity theft. I don't believe so, but I can check.
So no personal identifying information.
Well, their name was there, and that's PII, and that's why we take it so seriously.
Right.
And so
I was a victim of PII just this January when my personal information was hemorrhaged just with the release of my name. When were these Americans informed that their information had been leaked?
So we have started notifications, I believe, around last month. But again, we don't have
Copy. So we're at a 5-month period here, and here's why I think this is so important. We're asking the American public to have faith in an institution that is now asking my local banks, my lenders, to provide up to 21 or even more, up to 81, according to them, data points of information that you're keeping in a federal server that has been breached. It took a month to notify Congress, and then we're going on 5 months now before the individual even knows that they're compromised. I have a real concern here with not only the data management piece of it, but that your organization, by not having an independent inspector general, is now compromised for any type of review on this. If Congress doesn't have the ability to control your budget, if the Reserve is the one in charge of monitoring you, and then there's no inspector general, would you agree that an independent inspector general has made these other organizations stronger as a
Well, I'll
result of
tell
having
you-
an independent source?
RIG, because the Fed has so much sensitive information, has a strong capability on cybersecurity and
The gentleman's time's expired. Director Chopra, you can answer the remainder of the question in writing for the record.
Thank you, Madam Chair.
The gentleman from Nevada, Mr. Horsford, is now recognized for 5 minutes.
I want to thank the chair and ranking member for holding this hearing, and thank you, Director Chopra, for coming to discuss consumer protection efforts that your bureau has undertaken. I'm amazed every time that I'm reminded that it is your agency that is the only federal agency focused solely on protecting consumers from unfair or deceptive practices in our financial marketplaces, the only one in all of the federal government. The imbalance of information between sophisticated financial scammers and individual consumers have provided ample opportunity for predatory behavior in our financial sector. My constituents certainly remember the short time ago before we had CFPB, and they remember how financial institutions were able to saddle them with destructive and, in many cases, discriminatory loans that caused untold damage to them and to our economy. Under your leadership, I've been pleased to see that the CFPB is standing up for consumers, combating the negative effects of medical debt, breaking down barriers to credit, and holding the credit reporting companies accountable. I've also been interested in your actions to combat discrimination in entrepreneurial lending and to allow every American a fair shot at starting a small business. Here in America, in my opinion, especially in Nevada, the enterprising spirit of small business formation is alive and well. We've given the opportunity to succeed. Our constituents are industrious and hardworking with the determination necessary to create their own store or service. And yet, so many of my constituents, everyday Nevadans who have the dream of being their own boss, have continued to be discriminated against simply because of the color of their skin or their gender. Owning their own business is a crucial way for individuals to build wealth, and thus a key part of the conversation on how to close the racial wealth gap. Unfortunately, for so many of our minority and women-owned entrepreneurs, discrimination in small business lending has cut that dream short. That is why in March, I applauded your finalized rule to increase transparency in small business lending as an effective way to promote both equity and economic development. Director, would you please be able to highlight the benefits for our nation's women-owned and minority-owned businesses now that this final rule is finalized? And additionally, as you look back over previously administered programs, such as the Paycheck Protection Program, would you consider the data collected under this rule helpful to ensure an equitable implementation of those programs in the future?
Well, just like homeownership, small business ownership has been such a vehicle for families and communities to build wealth. We do not want it distorted by discrimination or other bad practices, which we have seen in our country routinely for many years. I do think you raised the Paycheck Protection Program. So many businesses, minority and women-owned, were not able to access those critical funds, and the data will help programs to be designed better so that we can make sure these programs are working as they are intended.
Now, the CFPB also is tasked with enforcing financial protections such as provisions of the Military Lending Act, which provides indispensable protections for the thousands of active duty service members that live and serve within my district. Nevadans in uniform deserve to devote their entire energy to defending our country and should not have to worry that they are being taken advantage of by malicious actors. Whether it's preventing illegal high-interest loans, standing up to aggressive debt collectors, or ensuring adherence to legal protections, the CFPB is standing up for our service members when and where it counts. Within your report and in various blog posts, the CFPB mentions that service members are more likely to report certain types of consumer harm. Could you detail what those were likely to be and whether they file complaints
on those matters, and how has the CFPB been able to take that up?
Credit reporting is very big. It is like the rest of the population, one of the top areas of concerns. And as I mentioned before, an inaccurate credit report or being hounded for debt that you don't actually owe for a service member or a military family is particularly pernicious. And we are doing what we can. We've brought multiple Military Lending Act enforcement actions. And
Gentlemen's time's expired.
Thank you, Director.
I will now recognize myself for 5 minutes. Thank you, Director Chopra, for your testimony and time today on this lengthy hearing. As my colleagues have expressed, many of us have heard from our constituents about concerns regarding the Bureau, its regulatory overreach, and its lack of transparency. From regulation by enforcement to undue burdens for small businesses, it's clear the CFPB, as it's currently operating, it's not serving consumers or small business owners. Director Chopra, the CFPB is unique among federal agencies. Not only is the Bureau not subject to the appropriations process, it also does not have an executive board to weigh in on decision-making and does not have an inspector general to root out waste, fraud, and abuse. Effectively, you oversee the Bureau without any meaningful or direct oversight. As a result, there's a remarkable lack of transparency with the CFPB, which is something I and many of my colleagues would like to see fixed. Director Chopra, in May of 2022, you unilaterally issued an interpretive rule without statutory authority expanding the authority of states to pursue and enforce violations of federal consumer protection laws under the CFPA. The CFPB further promoted this additional enforcement activity by assuring states they may bring an enforcement action to stop or remediate harm that is not addressed by a CFPB enforcement action against the same entity. And the CFPB announced it would enter into more than 20 agreements with states' attorney general's office. While Congress intended for the CFPB to enforce federal consumer financial laws and protect consumers in the marketplace, it did not intend for the CFPB to intimidate companies by conspiring with state agencies to pursue duplicative and sometimes competing and confusing enforcement actions. The Dodd-Frank Act limits attorneys general in bringing federal enforcement actions, and while state attorneys general may enforce the CFPA in cases where CFPB has not, the law does not allow for a state attorney general to become a party to an existing CFPB enforcement action. It's therefore inappropriate for the CFPB to recruit a state attorney general that's not otherwise investigating a company to pursue enforcement as a means of intimidation. Moreover, the effect of your May 19, 2022 interpretive rule is different from solely enforcing the law. It's more akin to deputizing state attorneys general to enforce the CFPA on behalf of the CFPB, something Congress did not authorize. How many actions has the CFPB initiated with state AGs since the issuance of your interpretive rule?
I don't have an exact number, but I don't think it deviates from prior practice across
Would you
multiple
check to see, I'm sorry, reclaiming my time, would you check to see and confirm in writing how many actions the CFPB has initiated?
Yes.
Okay. Of these actions,
When you say initiated enforcement action.
since the issuance of
Yes.
your interpretive
Okay, I
rule
will
with
check.
state AGs. Of these actions, can you explain to me why you involved a state AG as opposed to prosecuting the action solely under your own authority?
Well, we saw in the lead up to the financial crisis about how preemption, deleting state law, had very negative effects to protecting inside state borders. It is very common. The DOJ, the FTC, and others regularly partner with state AGs and state agencies. Our statute requires us to coordinate. We have MOUs with states and
Okay,
others. So I think we're trying to do exactly what the law is saying.
Reclaiming my time, first of all, I just want to reiterate that Congress did not authorize the outside use of attorneys general in this instance. Does the
Congress
CFPB,
explicitly
excuse me,
authorized.
does the CFPB engage in forum analysis when determining whether to institute an action in its own capacity or to engage a state AG?
We look at enforcement actions based on the company's place of business, whether we have any co-plaintiffs. We do exactly, I think, what every other law enforcement agency does.
The result of this, though, this interpretive rule, in some instances, has resulted in competing enforcement actions between what the state's actions are and what the CFPB's actions are. The Administrative Procedure Act provides interested parties with notice and an opportunity to be heard and the right to seek judicial review of agency action. Why did you choose to issue an interpretive rule regarding actions by state AGs as opposed to engaging in notice and comment rulemaking?
Well, it restated what the law already authorized. So this was not creating any new obligations on the public, but
Okay.
we were trying to be very clear that it is not, the CFPB does not have a monopoly on consumer protection.
Director Chopra, I've got one last question for you.
Sure.
By using the mechanism of an interpretive rule, haven't you avoided the requirements of the procedural protections provided by the Administrative Procedure Act?
No.
I disagree strongly. I do want to say that members of this committee, including myself, will continue to provide oversight to the Bureau and ensure that we make the Bureau responsive to the American people. My time's expired. The gentleman from Tennessee, Mr. Ogles, is now recognized for 5 minutes.
Madam Chairman, thank you. Mr. Chopra, we're in the home stretch. So, it's been mentioned, the data breach, and we've seen breaches across the industry, the sectors, both from a private but also public standpoint. So obviously, I think we all have concerns there. The CFPB Small Business Lending final rule states that covered financial institutions are required to collect and report to the CFPB data on applications for credit for small businesses, including those that are owned by women or minorities. As it pertains to the data on women and minorities, what's the purpose of collecting that data?
That's in the statute. The statute requires the collection for minority-owned businesses, women-owned businesses. I believe the statute has a number of objectives, including things related to community development, fair lending, and more. But that was not something that the CFPB decided. We were under a court order to implement that.
Got you. Now, when it comes to that, and understanding that some of this was perhaps pushed on the agency, correct? Do you think part of the intent is obviously to prohibit or track discrimination, but also fraud and abuse?
I think the primary purpose is like the Home Mortgage Disclosure Act, which collects similar data for mortgages, and it's used, again, for community development, data analysis, but also to detect and deter potential discrimination.
Well, and so part of that is, identification. And so I'll borrow from Senator Blackburn. As we're collecting this data, part of it is, definitions are important. So, from the agency's perspective, what is a woman?
Well, the way in which the rule is specified is that a borrower, we have published even a sample form, they can self-identify as to there will be options for race, ethnicity. It's really up to them. I mean, they don't have to provide that information. Sure. There's a specific statutory right to refuse.
But you explained the process, but if data collection is important and it's a data point that's going to be used and verified, whether it's in statute or not in statute, what, from the agency's perspective, what is a woman and how do you define it?
Well, we don't get into those questions. What we try and
so then why would you need that data?
Well, the agency was sued for.
So have you come back to this committee, to Congress, and said, hey, we need some relief here because this data point is data that we perhaps shouldn't house, nor is it relevant to our core mission? Have you made that request?
Fair lending is a part of our core mission, the Equal Credit.
But the data point that you have yet to define doesn't seem to be germane to.
The way it's defined is that a borrower gets to self-select. We received comments in the proposal was proposed before I was in office.
I understand that, but you're explaining the process of someone checking boxes. Again, you're collecting data.
Well,
it would seem
reporting.
It would seem that data is not relevant to your core mission. All right,
I
I understand
agree.
fair lending is part of your core mission. But if you can't even define the definition of a woman, it's a data point that you can't use in any analysis that you might otherwise make. And so you should be coming back and saying, we need relief from this in particular.
To be honest, that data is important for fair lending, and we try to put together and implement the statutory directives as faithfully as we could. I do think having knowledge on women-owned businesses who did have challenges.
So what is women-owned businesses? It's an important data point, just as you just said. So what is a woman again, please?
I don't really know what you're suggesting here, but the idea is that people are able
The idea
to
is that-
self-identify what
I'll reclaim my
demographic
time.
characteristics.
You know, in subcommittee, and when we were talking about the CFPB, you know, it was one of those moments. I don't, and this is nothing personal against you, by the way. I realize that you were not the person who put this in place, so please don't take this personally. Is the core mission of your agency has previously been done by other agencies. And if there was an agency that should be disbanded, I'll quote Hamlet, to be or not to be, yours should die a painful death. Because I do believe it's irrelevant. I do believe you've gone outside your core mission and you have abused the authority that otherwise Congress should take back from you. And I would argue in agreements with Mr. Donalds that your agency, and not you, sir, but your agency is unconstitutional. With that, Madam Chairman, I'll
There
yield
was a
back.
financial crisis.
The gentleman's time's expired. The gentleman yields back. The chair now recognizes Ms. Garcia.
Madam Chair, I have a unanimous consent request. I would like to submit 2 documents from the Consumer Bankers Association, which clearly requests the CFPB not only to issue rules, but also issue guidance to help industry comply with the law. This seems to contradict what many of my colleagues on the other side of the aisle are claiming, that the CFPB should not be issuing guidance. In fact, the document reads, the case for regulation through rulemaking.
Without objection.
Without objection. Thank you.
I would like to thank Director Chopra for his testimony today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witness to the chair, which will be forwarded to the witness for his response. I ask you, Director Chopra, to please respond no later than July 14th, 2020.